Good morning, everybody. Welcome to NinjaTrader Live. My name is Jim Cagnina, Senior Market Strategist, and I am joined by our Senior Economist, the fabulous Tracy Shuchart, aka Shy Girl. Shy, how are you this morning?
Good morning from Naples. I am doing well this morning. How are you doing?
I'm doing pretty good. It looks like we're going to actually have a sunny day. We've had a lot of rain on the island the last, I don't know, several days in a row. How's the weather situation down there in Naples?
Hot and humid. it's, it's summer.
Oh my goodness. So good morning, chat. Appreciate everybody being here in the chat. It looks like Engineer Bear might be the first to chime into the chat. I don't know if my scroll bar goes up far enough. A special shout out for Engineer Bear. Appreciate everybody being here with us today. We got a great lineup for everybody as well. Overnight, Shy, it just seems like the equity markets and the crypto markets have these little baby candles. They're kind of just sitting pretty close to where they ended up yesterday. Is this, not sure if there's should be risk on again or risk off again. What's your read on this?
Yeah, I kind of feel that way. And I think, as we're getting closer to August 7th, that when these tariffs roll out, I think markets are a little hesitant. I mean, we had, 2 days of a huge sell-off, yesterday, huge rally. Today seems kind of like a pause day, but we'll see. It's still early.
Yeah, I mean it begs the question, for this whole roll-off that's coming out, how much of this is already kind of priced into the futures markets? Let's assume nothing else changes versus having more of a reactive kind of action as we get closer and closer to the 7th. I mean, I'm looking at Dr. Copper as an example, and it's still a little bit depressed on prices in copper after that whole reversal.
Yeah, and I think, I think with copper, again, we talked about this before on hot commodities. I think this is going to need time, because the tariffs were not on ore and just on semi-finished products, which the market didn't expect. All those dislocations across all the warehouses kind of need to be cleared up first.
Yeah, and so, I was thinking last night, I was like, at what point do we go back looking at things like Dr. Copper to say, hey, what's going on with the global economy now versus how is this reacting to this shock of tariffs and trade wars and all that stuff? I mean, there's a certain point where it should get normalized, right?
Yes, I definitely think so. Now that that's at least that's cleared up, we know what it is. We just have to kind of reconfigure all of the warehousing that's going on, and then I think it'll probably go back to sort of a more normal barometer of the economy or the global economy.
Yeah, it makes sense. Bonds are on a tear. I mean, yeah, we're down a little bit today. We're, just 6 ticks or something like that, but still we're at a 115, almost 116 handle. We had a double top. I'll talk about that in the edge report a little bit later, but that market seems to be on the move to the upside. We have a couple of auctions, I think, this week as well. Is that correct?
Yep, we have on Wednesday we have a 10-year, and on Thursday we have a 30-year. Everybody's watching those auctions because everybody's watching duration, so we will see how those go.
Yeah. And then the Fed funds rate just seems to be, all right, maybe as you suggested yesterday, maybe we won't have a third rate cut. It's less than 50-50 now for the December meeting.
Absolutely. So we'll see. Although we had someone from Jeffries overnight came out and said he sees a reason for an inter-meeting rate cut, which seems a little overzealous to me, but you have one bank out there saying that.
Wow. Do you think this is a case of if I predict something wild and it comes true, I'm a hero? Otherwise, that people forget I predicted it, or is this a real thought?
Possibly. Possibly. I mean, I don't know. Again, like I said, I think it's a little overzealous. But in the overnight, we did have a little bit of clarity. sort of posted from the administration, posted the guidance on the tariff rollout. And so here's what we do know and here's what we don't know, just very quickly. So taken together, the average U.S. tariff rate is going to be 15.2% if they are implemented as announced. We still have 2 days for him to change his mind, so we'll see. That's up from 13.3% earlier. What we do know is it will count. Tariffs will not apply to any products loaded onto a vessel for transport to the U.S. before 12:01 a.m. New York time on Thursday. We do know that the articles of product, any product from Canada or Mexico that are included in the duty-free under the United States-Mexico-Canada agreement will stay as is. So those will not be touched. It will be other items that are not included in that agreement. Then we also have articles that contain at least 20% of the value of the article where the U.S. is originating will not be subject to a reciprocal tariff. So I'm guessing that probably more pertains to appliances and automobiles. So we'll see. And then we have transshipment, and this is kind of what China does to evade reciprocal duties, is they, send it in parts to, say, Taiwan. Taiwan assembles it, sends it to the United States, and then it's Taiwan origin instead of China origin. That would be an example of a transshipment. So there will be a 40% tariff on those items if they are caught. Now, here's what we don't know. So we're going to have a whole separate tariff unveiled on pharmaceuticals, semiconductors, critical minerals, and other industrial products in the coming week. So more ongoing uncertainty for companies and investors in those areas.
So it's not over. The gift that keeps on giving is not over. There's going to be some more.
Correct.
Let me ask you this question, and I don't know the answer. It's, you referenced a couple times the Mexico, Canada, U.S. Agreement, and it seems like that kind of trumps new stuff for some components. Right. Is that accurate?
Yeah, absolutely. And so, he actually, this is his agreement, right? He rewrote the original agreement in his first term. So this is his agreement, or his administration's agreement in his first term. So those goods remain underneath that agreement and are not subject to current tariff levels.
Got it. Okay. And we were talking earlier too, and you were suggesting maybe some of the big name analysts were suggesting maybe individual stocks are in for a little bit of a rocky road here going forward.
Yeah, that was the other big headline this morning. Wall Street is warning investors to get ready for stocks to drop. We had Morgan Stanley, Deutsche, and Evercore ISI all caution that the S&P is due for a near-term drop in the weeks and months ahead. Morgan Stanley sees a correction of 10%. Evercore sees a correction of 15%. So we will see.
Wow. Well, 10 and 15% are big numbers. I mean, 10% alone, that would be a 640 point break in the S&P futures as an example, which would raise some eyebrows and freak some people out. But the good news is in future trading, you could just hit the sell button and go short.
That is true. Easy peasy.
The question is when. I was looking at the overnight action. We had that big kind of recovery in both the E-mini S&P and the NASDAQ yesterday, after Friday's, giant red candle. And they were almost equal and opposite candles back up to where we started from. And so like right away, I was like, when I went to bed last night, I was like, all right, check first thing in the morning, see if we're going to have some continuation buying coming in or not. And then, so I did that, of course. And it doesn't seem the case, at least for the E-mini S&P, it seemed like It's a pause, right? We haven't given anything back yet from yesterday's gains, but we're just kind of stuck there with a really small body candle and a doji. And I'm wondering if that's, hey, we're price happiness right now, or we're going to wait to see how some more of this stuff develops today.
We'll see. I mean, it looks like we're in between like a 50% and a 61.8% retrace right now, just hanging out. So
Yeah.
we'll see. We'll see what happens today.
Yeah, and the same is with so the big winner I think is Solana. Did I say that right? Sol on the cyber
Solana.
Solana. So did I say Selena? I don't know what I'm thinking.
Yeah. I was like, who?
Only Murders in the Building is stuck in my head. Have you seen that? It's an awesome show, by the way.
I have not.
All right. So anyway, they're up over 3%. The Bitcoin's almost flat. Ether's almost flat, and Ripple's almost is up a tad bit as well. But again, this Ether, micro Ether's got 99,000 contracts traded already. I mean, it's a fan favorite right now.
Yeah, that absolutely. I mean, that is excellent volume to be trading in, really for kind of a newer product as well. So,
Yeah, for sure. So Shai, what about what kind of economic releases are we up against today?
all right. So today at 8:30 we have trade balance and imports and exports month over month. People will be interested in that, obviously, because of the whole tariff situation. And then we have S&P Global Services PMI at 9:45 and ISM Services PMI at 10 a.m. They're both very similar, but they release 15 minutes from each other. People will be watching that, so just be aware that 9:45 and 10 o'clock we do have some other important data dropping.
Shai, on the S&P Global number, I think it was labeled as final versus flash. If my understanding is correctly, flash is like the first estimate, and then the final is the final revised.
Right. And then I have the composite will be released as well. So, which is a combination of subsets within the index.
Yeah.
But everybody just looks at the headline number. So, and they are both rated, pretty important for today, as well as that trade balance number that we should see how tariffs are affecting our trade balance.
Yeah, and I glanced some of the international numbers that were out earlier today, and I hate to say this out loud, but Italy PMI was at the top of the list over Germany, over France, and over some of the other PMIs. I'm just saying my relatives in Italy are doing it.
All right.
They were all over 50,
Good
except for I
stuff.
think France. Any event, let's preview our special guest because Peter's fabulous.
Oh, Peter's amazing. We have Peter Boockvar. He is Chief Investment Officer at One Point BFG Wealth Partners. He is a wealth of knowledge. I've interviewed him before on Mic Drop Markets, and so looking forward to talking to him about everything that's been going on and get his view on, the Federal Reserve rate cuts, the BLS saga that just happened, and tariffs and everything else, markets, of course.
Oh yeah, I can't wait to get into the BLS saga. They had an interesting article in the Wall Street Journal this morning on it, and people are opining on it. And there's two device camps on was this a good idea? It's a bad idea. You're firing somebody who you cut their budgets, or you froze their budgets so they can't improve their systems. All of this stuff is really going to make for some interesting conversation.
Absolutely. Very much looking forward to it.
Absolutely. All right, chat. Appreciate everybody being here today. We'll give you the lineup a little bit later after Peter. We'll be doing online trading, trading the open. I think Merritt Black is with us today, if my memory serves us correct. Love Merritt. That dude is awesome. So we'll see him there. In the meantime, Shai, let's break really quickly and get an edge report in before we usher in Peter.
Perfect.
All right, let's start with the E-mini S&P real quickly here. This is, we're going to be talking about this a lot with Pharm a little bit later on this morning. But what I did was I took a daily candle and I was like, all right, I'm going to paint a volume profile for last week. I'm ignoring this week, but this is Monday, Tuesday, Wednesday, Thursday, Friday last week. And I want to look at the volume nodes here. And it's a double distribution, which surprised me, right? The main distribution and point of control is up north around that 6,400 level, and which is, above that 80 MA right now. And then the lower distribution, though, is all the way at the bottom of that old consolidation range around 62, 63. So that volume peak was significant. And again, it was only really 1 day's worth of volume to get that big peak here. So a lot of transactions settled there at the bottom of that range. Well, since then, we've had this equal and opposite candle that's me and Shai were just talking about on the daily, right? Which in my textbook, suggestion is that, hey, buyers took over again. This whole sell-off just ended abruptly, and we have a reversal now. And we have a little bit of a baby candle so far today. But, prices are still elevated above that 80 MA as well. So looking a little bullish today on the open. Intraday, we have all sorts of targets here from our friends at Mentor Q and from other places. Let me just kind of move this up so we could see it a little bit better. Apologize for not having that thing ready to go. For the bulls, we have that JAX 3 level at 63.90. And then above that, we have that 0 DTE call resistance in gamma wall at 6,400 as expected. Right above that a little bit is that 1-day max from Mentor Q. And then further targets up, blind spot 3, as well as R1 daily pivot study at 6409. For the bears, we got JAX 1 at 63. My dyslexia is kicking in. 6350. We have JAX 4 at 6345. We have a PAX line at 6342. And then we have the pivot and a 0 DTE high vol level. Two areas of interest down here at 6330 should the bears get some traction here. Let's pivot over to the 30-year bonds really quickly and take a peek. This market has been surprisingly strong. We have a double top that is brewing right now. We hit that 116, that should be 116.03, not 116.09. 116.03 peak. Let's see what we did today. Today we did, 116.03 exactly. So double top forming right there. A little bit of a sell-off today. Again, close to another equal and opposite on the downside, but we'll see where this goes from here. Moving averages are all just kind of racing upward here. Nice moving average cross from the 21 and the 50. EMAs, and then stochastics are kind of strong here too. So treasury bonds, this is a nice rally. This rally started back on the 16th actually, so it's 3 weeks old. And just intraday though, intraday is showing a little bit of softness intraday. We have that session VWAP. We've been trading below that session VWAP most of the day, and we're already back down to that pivot level in the bottom of the value area. The pivot level right now is at 115.21. We do have that JAX 2 level right below that at 115.16. Should the sell-off continue, we have that S1 is another target at 115.09. And then below that 1-day min. So there's some targets on the downside for bonds, but you never know. We could rally back up to JAX 1 at 116 even. The US dollar versus the euro. Let's take a look at the euro FX real quickly here. Euro FX this is an interesting chart pattern in my mind because we had this little area of support that I've identified with my rectangle right here, and that's approximately one spot 163. I dragged it across just to see what it would look like, and now it's resistance, right? A lot of times support become resistance at key zones. I think this is what's happening right here. The euro is a little bit soft against the US dollar today. Moving averages are all kind of sideways, but we're looking to see if we can get that 8 EMA to cross under the 50. That would be big, but right now they're kind of going parallel. Outside fib at 31.8%. And we have stochastics are treading water a little bit, 37 above that 20 level on the daily chart. So we'll see if this retracement could be textbook or it could be continuation selling on the downside for the Euro FX. A lot of moving parts, obviously, with tariffs and stuff like that. Let's just take a look at the chart, though. Like the bond chart, we have this session VWAP. We've been trading below that session VWAP. And look at the London initial balance was like, no. Where they tried to rally it, failed. And then by the end of the London initial balance, we hit some lows here, and we're still at the lows on the Euro FX today. S1 is framing the bottom of the conversation. So that is today's Edge Report, folks. Let's bring in our special guest. And our special guest, Peter Boockvar. Peter is the Chief Investment Officer of One Point BFG Wealth Partners. Peter, good morning. Thank you for being here with us.
Morning. Thanks for having me.
Greatly appreciate it. The first question out of the box, I don't want to get too political here, but BLS, the data, the way they do the surveys, is this just old-fashioned, needs to be updated, or is there some elements behind it that we should be worried about?
Well, when the government reports a jobs number for a country of 350 million people, 3 days after the month ends, even though the survey period ends sort of in the middle of the month, it's not the easiest thing to do to have every single business in the entire country answer these questionnaires. It's inevitable that the government has to estimate to an extent what the job creation or job losses were, and they do that through the birth death model. Now, for those that want to ignore the BLS, luckily we have the ADP report, which comes out just 2 days before the BLS, and ADP over time merges with the BLS on the private sector side. And the ADP report last Wednesday said pretty much the same exact thing as the BLS did. 3 month average growth in ADP, I think, is 37,000. The 6 month average is about 60,000. The 12-month average is about 120,000. So the trend is clear, whether you want to ignore the BLS or not. But the BLS eventually gets around to it. It just takes time. But this is not a new thing where the markets are on edge ahead of a jobs report, knowing that it's going to get revised 2 more times in the following months, and then it's going to get revised a third time the following year. This is not new for anybody on Wall Street who knows that these numbers, and when they're first reported, are all over the place. But the trend is still clear, and I think there's much ado about this. Yes, do we want everything much quicker? Do we want response times higher and more on time? For sure. But it's not easy when you're dealing with a big country.
Yeah, so let me follow up with that. You suggested that, the private payroll company, ADP, there's other ones that folks use as well. I don't know, in my simple mind here, I feel like that data is like almost real time and should be a lot better, right? Because it's real data that's input on a regular basis. Every other week you get your paycheck, and that could be accumulated and reported. And it just seems to me that should be, we should focus on that a little bit more. Am I off base on that?
No, you're not. I mean, ADP has millions of payroll slips in hand. Yes, there's been some issues with their seasonal adjustments and some of their internal methodologies, but yes, they have data in hand. And it's why when they do revise their numbers, there's barely a revision, because usually the first time around, it's close to being right. Now, maybe after what has gone on here over the past week, and definitely putting sort of a lens on the process of the BLS, that ADP will become more important. But again, as I said, irrespective of that, ADP and BLS pretty much sent the same message last week for the July jobs data.
And I kind of want to move over to tariffs and talk about that a little bit. Analysts have been projecting that we're going to see a huge spike in inflation. We haven't seen that yet, and I know they haven't really come into implementation entirely yet. But do you think that that we are going to see a spike in inflation? I mean, it's already kind of sticky and probably a little bit higher than where the Fed wants it. But do you see us having a spike in inflation? And then that would lead me to ask you, is the Fed right to hold, or are they behind the ball and they should have already cut?
Well, we know theoretically, because tariffs are a tax is not inflationary because it's one time, and inflation is mostly driven by monetary and fiscal policy. That said, we did have a substantial rise due to tariffs in the cost of prices. If you look at the CPI number, if you look at certain goods, like anything related to the home, linens, window coverings, floorings, toys, sporting goods, a variety of different things were up 1, 2, 3% in June from May. That's not a year-over-year number. That was a 1 month number. Towels, linens were up 5.5% in 1 month. So we saw a substantial rise in prices in those items that we import from overseas in the June CPI number, and we will continue to see that in the months to come. Now, whether it's repeated next year or not, defining it as technically inflationary, it remains to be seen because technically it's not going to be repeated because it was one time. But on the other hand, if all these tariffs muck up global supply chains that takes multiple years to sort of reset, well, I do think that you're going to have multiple years of rising prices. So with respect to the Fed, the Fed's obviously in a corner here because on one hand, they want to respond to the labor market data, but on the other hand, waiting to see how these price increases are playing out. I'm of the opinion that inflation and stable prices should be the only thing the Fed focuses on, because if you get that right, then you get a healthy economy and labor market. We know that's not their mandate. We know they're going to lean towards the labor market, and you can basically slam dunk a September rate cut. Now, whether it's 25 or 50 will depend on the incoming data, but I think Jay Powell is going to be more measured with these cuts. I think he'll give us one in September. He'll give us one in December. He'll probably give us one in the early part of next year, and then he'll exit stage left. But 3 cuts, let's just call it, gets you to about a 3.5-ish% Fed funds rate. And inflation, I believe, is still going to be around 3. So I don't see many more rate cuts than that. And we also have to question where is the long end going to go in that scenario, particularly after the experience that we saw at the end of 2024 when long rates shot up.
Exactly. And so what is, go ahead, Jim.
Yeah, no, I'm sorry. I was just going to just ask about how does GDP kind of factor in here? We have the New York Fed staff cast, and the Atlanta Fed now tracking about 2.1 for Q3, which is gone down considerably from their now casts. Is that a trend that we should pay attention to?
For sure, because the first half of 2025 GDP growth has averaged 1.25%. So let's round it to 1.3%. That's pretty punk growth. And you have to merge the first 2 quarters because of the distortions in timing in terms of ordering and front running ahead of the tariffs and inventory building. So putting that together, we're entering the second half of the year with barely above 1% growth. It's a far cry from 2 and 3% growth. That would have been a more healthy situation. So there is fragility in terms of growth. And yeah, if we can accelerate in the second half, that would be nice. But the question is that possible in light of the tariff barrage that we've gotten? I'm a fan of low taxes, and I'm not a fan thus of tariffs because quantifying tariffs, call it 15% on $3.3 trillion of goods imports, and you can trim that by maybe 400 billion because of the USMCA, call it 2.9 trillion, round it to 3, layering on a $450 billion tax onto the US economy. Maybe I'm old school, but I think higher taxes like that is a growth drag rather than a growth generator. So I'm more worried about slippage from that 1.25% first half growth. Now we have to keep in mind too, when we talk about GDP, is don't look at it just holistically from top down. Understand what the drivers are of that growth. All of the growth in the U.S. economy right now is coming from the enormous AI spend and infrastructure build to the point where we know companies in totality are spending $300 billion plus, and not just on paying software coders and buying NVIDIA chips, but all the way down to the cement producers that go into the footings of a data center. Anything related to state and local government spending, because they're still a lot of money piling into infrastructure. The federal government spend is enormous, but it is beginning to slightly slow. And then the other area of growth is upper income spend, where a lot of them are mostly spending money on leisure and hospitality. If the Fed starts cutting interest rates, counterintuitively, you can actually see a hit to upper income spending because interest income is a major driver of that spend. Because government spending on interest expense is somebody else's interest income.
Yeah.
So understanding where the growth is coming from means that we can focus on the trends in those particular areas because we're not getting any growth contribution from other parts of the economy, like lower to middle income spending is sluggish, manufacturing's in a recession, housing is in a recession, global trade is muted, capital spending XAI has been flatlining. So I think it's important to have sort of a broad overview of what's driving GDP growth when talking about the top-down numbers.
Yeah, no, you just gave us a lot of information. Hold that thought for a sec. We might have some new data dump right now. Shies, what's coming out right now?
We just had the trade balance was minus 60.2 billion, came in lower than expected, which was minus 61.0 billion. And we had exports minus 0.5%, imports minus 3.7%. Trade balance is really the big number there and came in lower than expected. So I'm sure that we will hear that tariffs are working.
We don't. The markets. I don't think the market's cared about that release. I'm not seeing any big movement here for this particular number, but they are working. Shai, you had another thought also for Peter.
Yeah, Peter, I just wanted to look at the market overall because, we trade a lot of the index markets here. And so what are your thoughts? We did have, say, Morgan Stanley, Deutsche, and Evercore came out yesterday, said they expect a correction 10 to 15%. What are your thoughts on just the general market here? Are we a little overextended? Are PE ratios a little too high? What are your thoughts here?
Well, the market rally off the April low has been predominantly driven by the AI tech trade that has gotten a second wind, and we've obviously seen that in NVIDIA for sure, but everything that follows that, and financials have had a nice run because when you look at financials directly, they're not really impacted by tariffs. Now, obviously, indirectly they are because their customers are, but the financials have also benefited from robust capital market activity over the past quarter. But if you broaden the lens out of the market, a lot of companies that are directly impacted by tariffs, small, medium-sized business companies, which have had a nice bounce off the lows, are still below their early February highs. The transportation index is off its February highs. So when you look at the index, as you mentioned, you look at the S&P, you got to pick the direction of the AI trade. That said, what is interesting also too, and I expressed this back in January, February, the Mag 7 trade has splintered. It's not just all seven stocks that are driving things. Investors with those seven need to be a bit more discriminating when they decide what to buy. Tesla has sort of dropped out. Apple has sort of dropped out. Google had a good quarter, but people are questioning the growth rates of their search business in terms of the competition. And Amazon, after what we saw last week, sort of a mixed bag with the slowdown in AWS growth and an enormous amount of capital spending. So the Max 7 is really just, NVIDIA, Microsoft, and Meta right now. And even Microsoft and Meta, as phenomenal as those businesses are, CapEx right now is running at about 35% of revenue. It was mid-teens just a couple of years ago before the AI build-out started. So, over the coming quarters, we're going to have to see whether all this spend is going to be worth it. So it's interesting. You look at a chart, the MAGS ETF. It's really just back to its February high, hasn't broken above again because that's splintering in the MAG 7. So again, to bottom line your question, you got to get the NVIDIA and AI tech trade right if you're going to figure out where the indexes go, because without that group, you're going to lose the index. With that group, you can maintain these levels.
Awesome. And we had some earnings last night. Was it Palatar? I always pronounce their names wrong.
Palantir, yeah.
Yeah, that seemed to be wildly successful.
They had a great quarter. Growth rates are amazing. The only issue with that stock is the valuation. I think they're going to they guided to about 4 billion of revenue, but the market cap is like 370 billion. So you're talking about a company that's going that has almost 100 times sales uh, valuation. So that's the only issue with that company. It's just it's an off the charts valuation. As long as they can keep putting up numbers, maybe they can sustain that. But the second that growth rates slow, which it obviously will at some point, but who knows when, then that market cap will be vulnerable.
Got it. Awesome. Well, Peter, greatly appreciate your time this morning. I cut and paste your X handle in the chat. Everybody, highly recommend you give Peter a follow. There's all sorts of good stuff there. Peter, thank you for being with us. Appreciate you, man.
Thanks. I appreciate you having me
Thank you.
on. Good to see you, Tracy.
All right. Wow, great intel. We got to get Peter on and talk
A lot
longer.
of intel. I agreed. I gotta go. You gotta go back and re-listen to the whole GDP when he was talking about the GDP and the breakdown, because I think that's really imperative information.
Yeah. We got to clip that and get it out on social. That was really good.
For
In any
sure.
event, Shai, thank you so much. I appreciate our great start we had at NinjaTrader Live, and we will talk soon. I'll see you in the chat.
All right.
All right, it is time for Pharm. Here he is. He's right. He just snapped his fingers. He is in with the blue shirt today. Pharm, how are you?
I'm doing all right. How about yourself?
Pretty good. I had a rough night last night, but I woke up anyway. Deli is not around, so I had to wake up. And my son and his lady friend from Tucson had an early morning flight to get uh, back home, and so last night we sat around the fire pit a little bit and hung out. So it was fun. I'm not complaining, but the extra glass of wine probably was not necessary.
Yeah. At this age, you can't have that extra glass of wine, right, Jim?
I'm hoping I'll get to a certain point where I'm old enough where then it kind of cycles back. Then it's time for that extra glass, but I don't think I'm there yet. I don't know.
Right. I got my 4 hours, so I'm good to go. So can do another couple of days of that.
I
You
don't
trade
know.
yesterday at all, Jim? Yesterday's action?
No, I mean my focus is I've been focusing on copper, and we could talk about that if you want, but that's been my focus lately for some strange reason. And maybe because of the giant candle we had, and all of a sudden it's like, wait a second here, what's going on? So I've been spending a lot of time on that. But no, I've been kind of waiting to see what happens here today. I mean, I did a post last night. I was thinking about uh, yesterday's E-mini S&P price action, creating that equal and opposite candle. And I really didn't know when I woke up this morning if it was just a blip and we were going to, end up selling off again overnight, or if we are going to have continuation buying and we're going to rally higher. And really, neither of those two things happened. We really had a little bit, but it's just a baby candle so far this morning.
Yeah, yesterday was and it was kind of funny. Leo and Nick were on I caught like the tail end of it, and I have a bone to pick with Nick for manifesting that trend day that he did, because I'm kind of in the boat with him where like yesterday was exactly like Friday's open, except the opposite, right?
Yeah.
The opening drive was just absolutely insane. So if you didn't just like yeet into that open, good luck finding a pullback until it's up, 20 handles or whatever from the open. So it's a pretty wild day. Definitely not, my type. I'm looking for setups, and that was a tough spot, especially with NQ. Like it kind of rallied like right there at the end of the night to open. I think it opened not quite on a true gap above Friday's high. It was like a handle or two, and then just kind of went rip city. So definitely not the best day to trade for, like, if you're RTH only. I think I posted on X last night. We had it was like 120 handle range if you took like the full candle from Sunday night's open until the 5 p.m. close yesterday. It was like 120 handles. And for 5.5 hours yesterday out of the 6.5, we were in like a 20 handle range. So definitely interesting to see that dynamic. And I mean, it's not like that's anything like really new that moves happen overnight. But just the way that it played out made it kind of tough for cash hours traders. So not my cup of tea, but I mean, you're right. Like the NQ candle in particular, like is the gap. I mean, it's basically the gap, like within a couple of handles. So I mean, it makes things relatively straightforward, I would suppose. Yesterday's range. I mean, it's going to be all about yesterday's range to me. And, today, overnight, we've traded above it, above yesterday's range so far. We did have a little baby spike on both.
Yeah.
And so far, we've accepted above that. So we'll see if that continues. And because of that, like your overnight range is also at a kind of a perfect location, at least the overnight low on both NQ and ES. So, I mean, like at least it's somewhat straightforward. From that perspective into today. And I'm curious what it's going to be today, because if you remember on FOMC, it was so over, right? And then we were so back after hours on Wednesday. And then I'm going to get this all mixed up. And then I think it was just over for a couple of days, right? With Thursday selling off the highs, and then Friday's continuation. Massive move up Sunday night into yesterday. Like, what's today going to be? We're going to chop? Or like, is something going to happen, right? So it'll be interesting. But yeah, I mean, your overnight range right now is at an excellent location to sort of have a plan, I think, today. And we'll get into that.
Yeah, and I'm just kind of glancing at the quote board here. I think if and Tracy's is posting in the chat right now. Trump is, I think, being interviewed on CNBC right now. And so you expect a little bit more price action than we're seeing right now, but I don't know, maybe he's behaving himself other than the 250% tariff on pharma. Wow. Let me just pull up the daily chart. Here's what surprised me about this. This is just a daily chart. And this volume profile that I have on my chart is just for last week. I don't have any volume profile data for this week yet. I just decided not to put it on. And I see this double distribution. I see this relatively big volume spike at the bottom of this old consolidation range around 62, 63. And that's only 1 day's worth of data, right? Because this is where we ended up on Friday. And then I looked at, and I kind of raised my eyes and was like, all right, where's the point of control? Well, there's the second volume distribution further, and there's like a lot of nothingness in between, as expected when you have that really, really sharp move. But now it's kind of like we're in no man land. We're kind of getting back into the value area of last week. And, I'm thinking, well, this could possibly be strong. We could possibly get a drive back up to that point of control and then some.
Yeah, to me, that's basically the target. And again, let's call it, if we're holding above the overnight low, because it's at such a good location. That was my expectation. I was using kind of 58. What was I using? 58.5 to 66 for this week. I think for today, you could call it 53.75 to 58, basically 58.5 on ES. And that's the expectation, is that you just kind of get sucked back up towards that volume point of control. The overnight high is kind of sitting in a bit of a monthly LVN on ES anyway. So we've traded through that range, kind of like the 70s, mid 70s, I suppose, 80. We had a daily high at 74. And then other than that, we, haven't put a whole lot of time in there. Maybe it's relevant. It's acting that way overnight, but I also think we had just a massive move. So I'm trying not to read too much into that. I do generally expect this to come up and test, let's say 63.95 to 400. And as long as it gets through there, then you've got that volume point of control sitting, just a little bit higher than that with that high volume node. Also interesting that, like, if you look at the profile on NQ versus ES, I mean, the NQ profile last week was like laughable. I think I said that maybe on like Thursday or something. It was already laughable with, like, this centrally located distribution that was nice and pretty, and then like the tails on that thing, what's that, leptokurtic or something like that. So I mean, just huge tails on both sides with no volume. And ES really put in a lot more volume in there at the lows than NQ did relative, to the week. So little bit of difference in terms of their profiles. And I think NQ is going to drive a lot of it. Because, I mean, like, so YM is sort of stuffing its head into this kind of 393 to 428 spot. And then NQ is actually stalling at the 720 week volume point of control. And I think it needs 425s to 438s to really open things up. So maybe ES plays follower today, but I definitely lean towards, if we're holding above the overnight low, we're going to suction up towards that volume point of control from last week. But I don't know. I feel like we have to keep an eye on the different indices. And I do that just because of their overlap, right? It tells me, is tech bidding today? Is, the non-tech components of ES bidding today? What's going on? So, we'll see. It should be a straightforward day, but now that I said that, it's going to be weird.
Yeah, I mean, I just popped up the Russell also just to take a peek. And full disclosure, I have not looked at this yet this morning, but at least the last three bars are pretty similar to the other two stock index futures from a percent point of view. The Russell's slightly stronger, maybe, or about as strong as the Nasdaq right now. But again, we got that small body candle, we got that doji looking formation, and moving averages are like, these two are like a bowl of spaghetti between the 8 and 21, kind of tangled up. Almost like a pause, just waiting.
Yeah. And I think it makes sense to pause just a little bit. I mean, we had volatility get absolutely destroyed yesterday. Obviously, ranges the last few days, if you look at the entire day, have been, certainly much, much higher than it had been for the last 30 days. And so, maybe a little bit of consolidation makes sense for today. But, we'll see, right?
Now let's get some farm charts up. Volume in the E-mini S&P is way off yesterday's pace. We have 133,000 traded so far. And it's not bad, but it's, yesterday we we were way above this at this time of the day. So we'll see what happens from a volume point of view.
Yeah, it looks like mission accomplished for our buyer. We've had a big buyer in the tape. And I actually missed it on Friday. One of my students that's in my course spotted this buy program that we've nicknamed Peter Pan, not affectionately, came in and defended on Friday. And like, that's his hallmark, is just lifting this pig overnight when everybody's sleeping. All the sellers sleep. Seems like they don't mess around overnight, the big sell programs, that often. But he's been in the tape. And certainly kicked this back to the center of this range, right? So you had Friday's hold, which, had swept out that 62.41. I conservatively dropped the bottom of the prospective range to 62.20s, for this 5-week balance. But I mean, really taking that 62.41 low was effectively bottom of range. And so, we've ripped kind of back towards the middle a little bit more. That the orange lines were from yesterday. That was basically the gap. And you can see, today's low, this baby candle sitting right on on top of it. And the cash hours range was roughly that range. I want to say 63.02 for the low. So, sitting right in the middle, a little bit more towards the top, you could reasonably see, these higher prices traded and cross back up towards the top of this range, if we don't get kicked back out during cash hours. So I just, sometimes it's better to just keep it simple. And, sometimes a simple box can keep you out of trouble, right? I mean, you definitely don't want to be short into the bottom of a box unless you're like on runners, or long into the top of a box, again, unless you're on runners. So it doesn't mean that you have to fade it, but at least helps you to manage risk. And now we're just sort of sitting in the middle, right? So today's going to be sort of an important deciding factor, I think. And again, I'd maybe call it, the weekly level I've been using, go over to the 30-minute chart, was 58.25 to 66. And I do think you can, on my daily chart, you'll see I've got allowances for, 53. The spike base basically was 53.75 yesterday to 58.25. We haven't really gone anywhere. So it could be a situation where maybe like we come in and we sweep out the overnight low, reclaim it. And I think that's fine, especially if we're holding 53.75. But yeah, if you kind of look left towards that profile that you were mentioning from last week, you got the meat of it is sort of above 6400s, right? So, I mean, if it's a situation where, you do see sellers defend this 63.95 to 400, and buyers can't get up in there, and maybe they have to start thinking about like, okay, well, I'm a little bit trapped. do I see reason to liquidate? I mean, it doesn't look like it right now, right? But I mean, if something like tomorrow comes in and then we take out today's low after a failure to get back into the meat of last week's distribution, then, maybe that changes their minds a little bit. So, I'm going to keep an open mind, but my lean has been basically that exactly where we are. If we're holding above this range, again, call it 58 to 66, 53 and 3/4, 58, that we're probably going to new highs. So if sellers can dump this spot and offer it and sort of break down yesterday's profile, then it can make things just a little bit more interesting, I think. But I mean, they were just notably absent yesterday at any location that you might have expected sellers to present. And so that's sort of a red X in their column. I think it was Wednesday night or I think it was Wednesday that I posted that on Twitter X, the other way around, right? So buyers had 2 red X's and sellers had a couple of green check marks. Well, sellers definitely, I can't even call it a red X from yesterday. I mean, they were just gone. But at the same time, like when you're getting a huge cover rally like that, why are you going to show up and try to stuff that? So you generally want to wait until that cover rally is over. So like maybe, again, I'm not optimistic, but maybe they come in and find a way to offer yesterday's highs, backfill some of yesterday's structure, which is, a little bit awkward, I would say, not necessarily thin, a little bit awkward. But that would be your sellers, what they're hoping for. And then for bulls, again, as long as they're holding above this 58 here and can lift this overnight high, they're coming up into 63.95 to 6,400, probably a little bit stiff. And you could have called it up to 64.02, 64.03. For this week, if you wanted to be more conservative, it was relevant last week, but generally above there. And I mean, I don't really see what we're doing other than going to highs. So that's kind of the big picture. I'll flip over to NQ real quick. I don't even remember if I updated NQ.
But by the way, Pharm, real quick on the E-mini S&P. I mean, I just noticed this. I wasn't thinking about this until the second. I mean, so far our daily range, if my calculus is right, is 15 handles, and it all happened during the London initial balance. I mean, it's pretty tight right now.
Yeah, I mean, it's really narrow. And, again, after a huge move, from Sunday night until, yesterday after hours, I suppose we can, we can understand that a little bit of a pause and sideways consolidation. Doesn't have to be bearish, but I mean, at least put sellers in a situation where, they're close enough to the overnight low here, wherever it ends up. I mean, obviously we still have 38 minutes. Where, they could potentially show up and take us below the overnight low. And I mean, anytime they do that, you have to pay a little bit of attention. I mean, it seems like for a month, maybe 2 months, it seems like that just never happened. So if that starts happening, then you kind of got to pay attention, especially in this situation, given the overnight low is sitting right there at yesterday's high. So, if all this overnight volume ends up trapped and sellers do break this back down into yesterday's range, I mean, it at least keeps things a little bit more interesting from a two-way perspective. Here's that NQ profile. I'll just kind of zoom out because it's like hilarious. Central body, your primary distribution, and then just like nothing the rest of the week. So to me, this 424 to 438 I'm using actually for this week. And you can see the trailing week behind it. I guess that would have been the 720 week. That was sort of the upper edge of the primary distribution. So I think that's going to be key today. If that holds as resistance, then maybe sellers have a shot to avoid the rally to new all-time highs. I'm going to click over to the 5 real quick here. So like to me, I mean, the trade is pretty straightforward. Again, we'll call it 53 3/4 to 58 if we're holding that broadly. Then I'm going to be looking for longs for rotation back up to the overnight high, probably. With runners for, I mean, whatever. I talked about that 53.95 to 5,400. I would probably be thinning out a little bit there, but on a reclaim, it looks pretty possible to see new all-time highs. So I don't mind holding runners in situations like that. If sellers do come in and they're able to offer, again, let's call it 53 3/4, actually call it 53.5, because I think 53.5 offered gets you 42.5. I think 42.5 offered gets you 32.5 reasonably. I mean, I've got this weekly spot in between that was bid yesterday afternoon, but broadly 53.5, 42.5, 32.5 keeps it simple. You can see you've got LVNs there from yesterday. And so it can be pretty straightforward that we could sort of fill in some volume here. And I mean, like below 32.5, I mean, you never know. It's not that far away.
Yeah.
But I would say like 29 to 32.5. If you offer that, there's nothing below you. So really all of yesterday is going to have to vomit if 32.5, 20, let's call it 29 to 32.5 is offered. No reason to think that's coming. I mean, it looks like bulls are doing just fine overnight, but hey, like every session, even every Asia, every London, every cash, I'm making a fresh assessment of what those participants think of the action. And so I just keep in the back of my mind while everything looks good and above, 58 to 66 to me is my spot where sellers are dead. I keep an open mind. Maybe they just weren't ready to sell yesterday because all the other sellers were busy covering, and maybe they take their opportunity today and we're surprised. So I keep an open mind. And if that's the case, then I'll be reactive. So really the overnight low could not be at a better location, I think, for me today.
Yeah, and we do have, there's a couple 10 o'clock numbers, ISM, and we have a 9:45 number that PMI, the S&P, but that's kind of a final versus a flash, so don't expect any surprises there. But that ISM number at 10 o'clock, I think, could cause some folks to think. And the market now seems to be focusing a little bit more on the fundamental data, a little bit more on, a little bit less on, the noise that we're seeing on, on on social, right? And I see that in Dr. Copper too. And I asked Tracy that this morning. I was like, what point do we kind of shrug off this trade war and say, all right, when are things like Dr. Copper going to be indicative of the health of the global economy? And so I kind of translate that into some of this economic data that we're going to keep getting out, even though some folks say the data is bad, but something like ISM isn't. That's an independent agency. So that might set the pace a little bit as well after the opening range.
I agree. ISM services in particular, I think, is really important. I mean, services have stayed strong through this cycle. I mean, very, very strong. I mean, even at, peak rates, at the apex of the hiking cycle, I mean, very, very strong. And to me, we're more of a services economy. That's what matters more. So yeah, if you saw, after what we saw in jobs last week, if you see, ISM and contraction on services, I think the market's going to be forced to pay attention to that. It doesn't mean that it matters today. But I think the market would have to pay attention to that. And, really earnings and growth to me are what the market is worried most about right now. Really earnings, which I like, but economic growth obviously ties in to earnings. And so those are the things that I do think we need to watch out for. And then you look and see how the market responds, right? I mean, if let's say we get a weak ISM services and, the dollar is offered, bonds go bid, and then equities sell, then you have to kind of pay attention and say, okay, well, the market's taking this a little bit more seriously. If there's follow through, right? You get the algorithmic response, and then you get the human response, sort of after that. And so normally, if the dollar's offered and bonds are bid, yields are down, that's supportive equities, right? But if you then see it come the other way, where equities are sold, I always watch that initial algorithmic response, because sometimes that can give you some clues, because somebody's got to tell them what to do, right?
Yeah.
Right. So you're getting somebody's opinion that matters when you see that initial reaction, even if again the human reaction is different. That also tells you something when you get that information. That's like, I'm not a macroeconomist by any measure. I say that I'm a price monkey, but that's how I price monkey my way into macro, is just purely watching how various market instruments react to data, both the algorithmic response and then the human response after that. And that's how I arrive at my macro. And it seems pretty reliable, because you can get 10 macroeconomists in a room and you'll get 10 different opinions about things. So I try not to pay too much attention to that, but I pay attention to what the market pays attention to.
it's harder now. I mean, we get information with the snap of the fingers. I mean, in the old days, you'd see the Caterpillar numbers that came out this morning, and you'd be like, "Oh, that's not so good." And Caterpillars, it kind of gives you a good boots on the ground, idea how the economy's doing from that brick and mortar point of view. But there's just so much information, and it happens so fast, and it's instantaneous that, yeah, Caterpillar they didn't do so good this morning, but the market doesn't care that much.
No, no, not yet anyway. So we'll see. And you're right on Dr. Copper. It's been tough because, you had that issue with the exchanges and tariffs and all that kind of nonsense. And so, a lot of people have been looking at it like, oh my gosh, look what Copper's doing. And it's like, I don't know. I just don't know if we can read into it just yet or when we can. But it'll definitely be interesting if, the dollar's headed to hell, Copper's headed to hell. And, then maybe we got to pay attention to some things.
Yeah, for sure, for sure. Well, Pharm, listen, I appreciate you getting up early, being here with me today, doing Tape Talk. Learned a lot. I think appreciate everybody in the chat. Don't forget, let's hit that thumbs up button for Pharm and the subscribe button. It's right next to it. It's easy to do. You click on it. It's free. It's awesome. Hopefully, you guys are hitting those buttons for us. Pharm, have a great day, man, and best of luck trading.
Yeah, we'll see you tomorrow.
All right, all right. We are ready, folks, for trading the open. We are with Merritt Black. Merritt, how are you, man?
I'm doing well. How are you, sir?
Good. Are you in Chicago right now?
I am.
The big
I wish
meet.
you were as well.
I know, but I mean, Deli's like, I'm going. You guys got to hold down the fort. So me and Tracy are, we're working.
Somebody's got to work around here.
But I am jealous. I think it's going to be fantastic. You guys are all getting together. I think it's really awesome that it's a meet and greet for traders, right?
Yep.
The bar was low to go to the event. It's going to be awesome. It's you, Deli, Stowe is coming, Pax,
Kane.
and who am I missing? Maybe DCP. I can't remember,
Kane.
but yeah. So fantastic, man. We hats off to you, man. Appreciate you making the effort and meeting our traders.
Yeah, it's gonna be fun, and I need to do more of that. And there was a lot of people I needed to see in Chicago. The risk manager for my desk, getting together with him as well, so that it's a much needed visit up here. So it's great. Beautiful town.
Yeah, no, it's a great town to visit. I mean, I left there uh, when I got to the point where, Ninja bought, my old joint. My kids moved out. Property taxes on my McMansion were ridiculous. And I was like, all right, honey, we're old now. Let's get out. Let's go south where the weather's nice. And that's what we
Sure.
did. I don't want to knock Chicago. It's a great city. There's tons of great restaurants and things to do. You guys are gonna have a ball, man. I'm jealous I'm not with you.
Yeah.
Anyway. So, what do you make of today, man? Uh, Marcus today.
Well, I'm still licking my wounds from the swing long I tried to get into last on Friday. That was kind of a funny Twitter moment for a lot of people with the had the big wide stop in there and people were losing their minds, and then it went and just flushed and took the stop out, and now here we are, well into the bounce. So I say that tongue in cheek. It's very important as traders when something doesn't go your way, you feel like the market screwed you, you got that bottom tick stop out like I did, whatever. It's important that you don't bring that baggage, right? Jared Tendler talks about emotional baggage and how it builds and whatnot. And I think he has some very good things to say about that in his book. Anyways, I'm I'm just I'm just a I've always got to be like teaching.
Yeah.
Sometimes I need to just shut up with some of that.
No.
So we have now retraced into an area where there's kind of an inflection, right? It's um it's a point where there was from the sell-off last week, there was a big low volume zone, and we have traversed that, and we're just kind of knocking on the door of some of the meat of the volume from last week. So it's another inflection. We'll see if we can break in and hold or not.
I agree with you 100%. I mean, I was shocked when I looked at last week's volume profile on the week, and I saw really a double distribution. One at the bottom of Friday's, at the close on Friday with a huge volume spike, and then the other
Yep,
one pretty far north, and then nothing in between, right? No man's land in between,
that's
which is
right.
what you're describing. And I was surprised to see that, and I didn't put that up until Sunday night. So it's like, all right, we got a couple of competing magnets here, competing points of control here. Which way are we going, fellas?
Yeah, I think that in terms of the volume, the upper one was massively more important and bigger than the lower one. The lower one was substantial, but the upper one is the real one. And so us getting up to this kind of level right here is important. So, you know, I'm not too excited about any downside right here, honestly. Um, I would prefer to see us start to hold a little bit higher than where we are right here into the open and get some traction and hold a little higher and then go with some longs to move into the VPOC and to move to the other edge of that distribution from last week. That's kind of on my radar.
Got it. Got it. All right, man. Well, before I go, I do want to do one plug really quickly, folks. I noticed you're using the web-based version of the NinjaTrader software, Tradeovate software. Remember, folks, there's 3 different versions, and if you have a NinjaTrader account, they're all they speak to each other, right? So you have the desktop platform, which I show every day. We have the web-based, which is what Merritt is showing right now. He's traveling. It's very handy. He's on the move. It also works on a Mac. And then there's the mobile app, which is uh, pretty good. And I downloaded it on my phone. So
I was using that one at the airport yesterday.
there you go. So, and they talk to each other, right? So if you need to get out of a position, you're in the airport, boom, you get the mobile app, you get out of your position. It all syncs together. It's super awesome. So I'm glad you're using it. And just wanted to throw that plug out there, Merritt.
Yep, you're not wrong.
All right, all right. Lastly, don't forget thumbs up for Merritt and the subscribe button, everybody. Appreciate everybody being here with NinjaTrader Live. I'm going to hop over into the chat, Merritt, and wish you the best of luck today.
Thanks, brother. Take care. Good to see you. Thanks for not turning me into a cat. I was hanging out with some of the crew last night, and Crudele and I were still laughing over that cat moment. That was funny. Hey, Tracy. Mobile app's so difficult to set up. That hasn't been my experience. It just kind of gives you the basics. If you're at an airport like I was and you're managing a position and or checking in on a position, it does a fantastic job of letting you do that. I'm always a fan as well, and it's something that I'm doing right now with my phone and whatnot. Um, is I like to set up a remote desktop as well so that I can, even from a small screen, like on my phone right here, I can remote in, I can zoom in to my normal setup, and I can have all that information, and have the flexibility of on my Mac here, sitting on my in my hotel room here, have everything I need to execute and whatnot as well. So it's good. Like I said, nobody's telling me to plug Ninja or to do anything like that, but I literally used all 3 yesterday, right? In the morning, the desktop, and then as I was traveling in taxi, in the airport, I did pull up the mobile. I also remote desktop to check out more. If I wanted to make like a more granular chart-based decision, you have that. And then here I am, on the browser on the Mac. So it's good stuff. It's great to have. Probably going to be pretty pretty. I'm not stalking any trades right now. We'll put it that way. I was about to say it'd be pretty quiet. I'm really interested to see how we open here in 20 minutes. And like I was telling Jim, if we can hold higher, if we can start to establish anything, can always check out gold. What is our front month goal? Z. One thing that comes to mind is never stop learning, never stop growing in your trading. It doesn't matter how proficient you get. And let me give a caveat. You do want to stop. You do want to get off the proverbial merry-go-round of the next strategy. Oh, the last one's not working. The next strategy, the next strategy. That's really important. I see that a lot where people are just strategy hopping and they're never mastering anything. There's different ways to trade with edge. I don't agree with what I think is the prevailing thought that just like edge is easy to come by, right? That you can just slap together whatever your favorite indicators or whatever, and it'll just give you expected value in your trading. Trading is hard. Deriving edge from other participants, a lot of the smartest people in the world, the smartest machines and algos in the world, is not easy, guys. Trading is hard. You can't just waltz into it. Unfortunately and fortunately for trading, there is a low barrier to entry, right? Anybody can open an account with a small amount of money and begin trading and watch a couple YouTube videos. It's not like brain surgery. It's as difficult as brain surgery, but nobody's letting you walk into an OR and just try it after a YouTube video. You have to really, really become a master at a lot of things, a lot of the fundamentals, a lot of the basics. Those of you who know me know we talk about this kind of stuff all the time. Get good at the simple. Get really good at mastering the fundamentals of trading and building out those skills. That's something we talk about in our mentoring groups all the time is what are those skills? Let's start to monitor them, track them. Have you self-rate yourself on each skill at the end of each day? It's really, really important. So I realize I'm jumping around here on a bunch of topics. But it's important that once you settle in on something, right? Dr. Steenbarger, what does he say? First get better, then get bigger, then get broader. In that order, it's a very specific order. First get better. Dive into something. It could be NADRO, it could be scalping, it could be opening range stuff, it could be order flow lab stuff, it could be all the different things that you see coming from Ninja participants. Boxes, I haven't really looked into what exactly that is, but Chris certainly strikes me as someone who knows what his trades are and what they aren't, and is able to execute upon that. So it's very important. And I agree, Cooper Steenbarger does rule. So first get better, get good at something, right? Stop hopping around to the next thing. Then get bigger. I also disagree with prevailing thought of this idea of you could get really good at trading and you could just make that $200 a day that your goal is. You could just do that. I don't think that exists. I don't think that in any world, unless you have some very, very unique, I might even call it odd, relationship with money, and you just want to live in Costa Rica and you just want to surf and, hey, more power to you. That's fantastic. But for everyone else, if you get good at trading, you get bigger. So I just think it's a very important point. Like, first get better, then get bigger. Work on growing, scaling up your trading, sizing up responsibly, that type thing. And if you guys have any questions about any of these points, just let me know in the chat. I'll keep an eye on it. And then get broader, and that's kind of where I find myself. I kind of spent many years where I was a little bit just focused on my own stuff. I kind of stopped reading trading books. I stopped really being mentored by people with different styles and whatnot. And the past couple of years, I've changed that. Part of my annual planning is to pick out someone that I look up to and have kind of looked at from afar and studied and said, I would like to learn from that trader, that investor. And I've done that the past couple of years. In fact, one of the people I studied from this year has been a contributor here on the Ninja Show a few times. Oh, you're asking for my other quote. It's not my quote though. It's from Did you guys see the tweet that I retweeted? The book that I talked, the little paperback tennis book. It's about this big, it's about this thick. Was it selling for like $600 or $700? Oh man. Somebody posted a picture of that and said, Merritt, look what you've done. Yeah, kind of funny. I actually, you know what I should have done? I should have bought up all the stock of that book, right? All the supply, and then pumped it and then offloaded it. That's what I should have done. I only own the one copy I've had since I was in high school. Real missed opportunity there. The quote from that book, The Truth About Winning by Tom Veneziano, is first do the simple well, then do the simple better, then simply be the best at doing the simple. I love that. I absolutely love that. And I'm going to tell you guys, it is super, super, super easy to just move past that stage. What do I mean by that? I mean, it's super, 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 super easy and a huge mistake to just say, oh yeah, I've got the basics. I'm on to the more advanced, more complexity, add something new, blah, blah, blah. Name me one performance field in which that works. It doesn't. You have professional golfers showing up before on the eve of the Masters or the British Open, or no, it's not the British Open anymore, the Open Championship, whatever it is, and putting down an alignment rod. Scotty Scheffler, the best golfer in the world, literally will get out a grip trainer that helps him make sure he's got his grip exactly right, and he kind of works that muscle memory, if you will. Are you kidding me? that we sitting at home after, I don't care if you've taken my course or studied with books or YouTube videos or Discord channels or learned from people on this stream, whatever it is, you gotta master the basics to an absolute degree of obsession. You gotta do it, guys. I hope you can sense the passion from which I speak here, trying to help you. You have to get really, really good at doing the simple well. And that takes time, that takes reps, that takes hours. It takes mistakes. It takes feedback loop of a lot of times you don't know what you don't know. You think you're, a lot of times in sports and everything, we put in a lot of practice, but the only thing that makes perfect is perfect practice. If your reps are low quality, and sometimes we don't realize that they are, which is why I'm such a big proponent of mentoring, right? I came from my days at SMB on a prop desk in New York, mentoring senior traders with junior traders under them, oversight from the desk manager, things like that. And that's why I run Apteros the way I do, is from lessons learned and seeing what works in terms of developing traders. Tom, I have been. Oh, I want to get to Garber question as well. But Tom, I've been trading a live personal account before I was old enough to have a live personal account, right? It was I gave violin lessons to kids, tennis lessons to kids for a couple summers, and saved up money and gave it to my parents to put into a brokerage account, and started trading that kind of my senior year of high school. So that would be 2005. So this is my 20-year doing this. So what are some of the things? And we got 8 minutes until the open here. We're not missing anything. I am sorry about that. I was just looking here. Great. Okay, so what are some, real quick before we get to the open, what are some of the basics? What are some of the simple things in trading? I'll tell you one, and this is not a plug. This is if any of my alumni from advanced group mentoring that Apteros does are here, they can back me up on this. I'm not just making this up because Jim said something. One of the skills we talk about is what I call execution, and I only mean it from a physical execution perspective. And it's platform. If you're fumbling with your platform, if you're fumbling with your hotkeys or your mouse and what buttons do what and how to do an OCO and do different things, how to change quantities quickly, that is cognitive load on your mind as you're trying to make short-term decisions, and it will degrade the quality of your trade decisions. So having platform, I'll mention, my days at SMB again. One of the first things they did with us was plopped us down in our chair and said, here you go. You're a junior trader. You only get 2 monitors. If you keep getting better and better, you can get more monitors. Here's your hotkeys. Learn your hotkeys like the back of your hand, right? Learn platform is one of the simple things that you need to obsess about. You need to master. It needs to be on autopilot and whatnot. Yeah, thanks, Wonder. I am aware. I'm going to be taking things very easy here today after my self prep, and you guys have heard me talk about this. Um, I'm not firing on all cylinders today, so I'm probably going to trade MNQ, which I've almost never done, but I think today's the day. I'm probably going to reach out to I'm not sure who. I know several really good ones, but I'm probably going to reach out to some kind of a coach or psychologist myself. I feel like ever since I have had that career day, and I was talking about this with Pax actually last night. Um, Ever since I had that career day, as some of you may recall, it's not really important what it was, but it was I got lucky. I was long when some of the tariff unwinding or extension or whatever it was news hit back in whenever it was, April, whatever. And I made like I was long some size. I added after even been being after even already being long. And I forget what it was. I think I made like, 1,300 points or something in Q in the matter of 20 minutes or whatever it was. Okay. So anyways, it doesn't matter. I'm just kind of giving you a little bit of background here. I feel like I have not been 100%, and I'm opening the kimono here, guys. I feel like I haven't been 100% since that day. So I don't know. It's always good. I say this all the time. Even the best need help. Even if you're making 7 figures, 8 figures, I know many a trader, right, in that realm, who need help. And so that is one of the main reasons why I think trading for a real prop firm, trading in a place where you can get help, where someone can actually see and look over you at your trading and say, this person needs some help. Let's help them. Let's help make them the best they can be. That is why you trade real prop. That's the only reason. So yeah, that's a little inside baseball with my trading right now. I'm in a little bit of a slump. I'm in a little bit of a drawdown. Nothing crazy, but I just don't. I'm just not as sharp as I have been, and I'm not totally certain it's related to the career day that I had, but there certainly appears to be a connection. Yeah, absolutely. We all ebb and flow with these things. Whether it's burnout, right? Fatigue, that type thing. Um, whether it's overconfidence, underconfidence. Um, it's and you know what? Just like I said, I think it was a tweet yesterday or the day before. Um, I talked about my underperformance a bit on the longer term swing trade side of things. We're about ready to open here. And what was my point three? Who saw that tweet? What was the last thing in that tweet? I said, I haven't done a good job. I've recognized the problem, blah, blah, blah. What was the last thing I said? Jay Wolf got it. I love my job. There's more to that than maybe meets the eye, right? To have, I've talked about this many times. Love is a big part, I think, of if you don't love this game, it's too hard. It's not worth it. You won't sustain. You won't sustain. You won't have consistency over any meaningful periods of time. Here we are into the open. Was that the Ryan Gosling character that said that? The Big Short is such a good movie. I'm sure there's okay. There's probably no one on this stream that has not seen that movie. All right, so we just ran some stops through these lows, and so I banged into this long here. You see the delta shift on the tape. Some buyers came in. So I'm just looking to take advantage of that. So again, I am executing over here on the dome. So you won't see the chart. Certainly stalling out here. Maybe a little micro stop run it'll stay inside the prior major stop run. Just like that. Those 2 or 3 bars kind of didn't put in a good low, so they ran those little short-term stops. But they let us hang in the trade, at least so far. Anything back down towards those lows will want to be out of the trade now that we've seen the response we've seen. I just scaled out of a third of the position. Probably gonna, yep, there we go. All right, so I flattened out of that. Don't like to see us testing the lows again. So I typically, this day and age, will stand aside before um, those pivots or swing highs or swing lows or whatever are ran typically, especially the way we came real close to kind of touching it twice. Knocking on the door for the third time is not a long-term formula for staying in a trade for me. Might be the bottom, and we puked it at the worst spot in hindsight, but so be it. Over the next 100 times, that's a really good scratch for me. And absolutely, we do have um, PMI numbers and whatnot coming out here in 10 minutes or so. So look, it was a nice little scalp. We got the stop run. We got the response from buyers. I got a scale out, and then a scratch on the remainder. So we'll look for another spot, maybe post news or something. Oh, full tilt. Asking a great question here. Great question is as in I don't know if it's they've heard me talk about that before, or if they've watched me on stream and are perceptive to my weaknesses, or what it is. But they're asking about, how often do I find myself getting into a period where I'm being too discretionary and have to take a step back? I feel like it depends on the conditions. Okay. So I'm trying to like give you an answer and process all that in my mind about how often, what period of time. It depends on the conditions. If conditions are so that volatility is a little bit higher, the amount of opportunities out there are higher, then I would say that I go through this cycle once a month, once every other month, right? And I'll take 400, 600 trades in a month, and so there's a lot of samples that I'm going through. It's not like a swing trader that says, well, I go through this cycle of this thing every month. Well, I'm going through a bunch of cycles of trades, so mentally and tactically and whatnot, I'm going through cycles of things. So once a month, every other month, when activity levels are high in the market, therefore my activity levels are higher as well. During more normal periods, it's probably more like once a quarter where I will, and to get, to bring this back to the question, um, I will have to rein myself in. I'll trade really tightly according to process, and that's either NADRO, like I trade how I teach people, right? It's either NADRO for swing or intraday position trading, or it's scalping from our scalping course type stuff when I'm trading shorter term. Like this trade here was, a BSR type of play. So anyways, we have names for trades, things like that. I'll trade very tightly according to those processes and things like that, playbooks, fairly rigid. And then I'll start doing well, and I'll start doing even better when I make really smart, wisdom-based compromise. Well, this is not perfect here, but based on this context and these conditions and this speed of tape and blah, 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 boom, you do something that's not by the book. And I think that's the highest levels of trading. But what happens ultimately for me is I just push it too far for too long. My performance starts to degrade. I start messing up what would otherwise be pretty straightforward by the book sequences. And I start to notice My students are trading better than me, like things like that. And I'm like, okay, I got to get back to the basics. I got to um, get back to doing the simple well, right? Like we talked about. Yeah, I appreciate it, Joseph, but I really disagree. I think the hardest way to make money in markets is purely mechanically. I think that, if you are truly mechanical, well, that means you're an algo, and that means you're competing with algos, and that means you're up against AI and every the stuff you've never even heard of yet, right? But the discretionary trader has a real superpower once you begin to master self, let's call it, which obviously is a lifelong process. Um, Once you begin to have setups with edge, and once you become an infallible risk manager, right? Once you have those three legs of the stool, right? Imagine a bar stool with three legs. If you cut off one of those legs, and they are risk, edge, right? Actually, a process with edge, a system with edge, a methodology with edge. There's only one definition of edge. Don't let anybody else tell you my edge comes from my pre-market workout routine. Anyways, and then your mind, right? Mentality, the way you think about trading, your belief systems, the work that's required to do those things. Those three things are the three legs of a bar stool. If you cut off one of those legs, that's a face plant, right? All right, so we're just waiting on some news releases here. Just chatting it up, just chumming with the chat. So in about 2 minutes, PMI, and then in 17 minutes, ISM non-manufacturing, PIMI. Yeah, NASDAQ, Zach, I was making that same joke earlier. Real missed opportunity on my part. For those of you who don't understand, people who like the pump and dump or whatever with stocks or whatever, that would be a great simple analogy to understand that. I buy up all the stock of, not stocks, but all the inventory of this book, and then I go around there and use my platform to say, this book changed my trading. It's a must-have. It's blah blah blah. It's fantastic. And then I don't let many of them loose, and so all of a sudden that supply demand, it moves prices up, and I own all the books, and so I make the money from. So yeah, I'll tell you what, we've had some. I'll just say it objectively. I think we've had some very good little chats this morning on this stream. I think if you go back, this is one for some of you to watch the recording. We might suck it up and not say anything cool from here on out, but from the time I said goodbye to Jim and we hopped on here, this was there's been a lot of nuggets dropped here today. So if you guys are just hopping on, number one, please follow the channel. Please give us a like for doing what we're doing here, trying to help you guys. And then if you're just hopping on, make a note for today to go back and listen to some of the nuggets from the combo so far. Great questions on y'all's part, by the way. Really, this is a two-way thing. It's not just me rambling. You guys are prompting a lot of the good questions. It was interesting going to trading stocks. because I had gotten so dialed in with using cumulative delta and trading futures. I was shocked to see how cumulative delta um, kind of didn't work for stocks. And I started to understand more about its calculation and the complexities when you have a wider bid-ask spread, and then what are called white prints, which are just orders that fire off in between the spread. So is that at the bid or the ask? How do you calculate it? It's a mess. Um, but yeah, I mean, I can't speak for SMB as a whole and the way that all they, again, dark pools. Oh my goodness. Yeah. Everything, right? Different, you know, uh, different ECNs and exchanges and different things like that. Um, but yeah, in general, they're very big on, and this is public and, knowledge. This is not some inside baseball thing. They're very big on teaching people how, participants work in the auction process. They don't use those terms, but that's what they're doing, right? Go, if you read Bella's books, he talks about held bids, held offers. Here we on the futures side of things, we like to have fancy tools and say, oh, look, there's an alert going off for an iceberg, like that type thing. But it's all the same stuff, it's all the exact same stuff. It's just a matter of what tools you're using to see it and things like that. Well, we had a good trade. We were in from right here, I believe. And we stopped out right here into this low. Scratched out, I should say. Like I said earlier, with news coming, with that being the third push into that low, over the next 100 times, I'm scratching that position. And then it was like news releasing, and I wasn't going to just, try to, as you guys have seen me do, um, catch like kind of more of a breakout style versus just a pullback turn. Um, it's just not a trade I'm going to take. So now we're at the upper end of the range, as you can see, right? We had this lower end, we ran those stops there, and now we're pushing towards the upper end of the range. Probably see a little bit of fireworks here, a little bit of stops being ran. Delta is lethargic. That thing's not going anywhere. Volume on the session is running just about average. Nothing nothing too high or too low. Recall the context that I mentioned when talking with Jim earlier. Let's try to get a long-term chart here and check it out. Let's try a 30-minute. Let's try hour. Starting to see it. Scrunch it out. So when you think of the volume from last week, where's my handy dandy notepad? Here we go. That lower edge is going to be right around in here, right? So we're just kind of, this was a very important inflection down here for NADRO, which is why I was trying to get swing long right there from like right here, and I got stopped out like right there. And then up to 220, I thought was an important inflection somewhere around here. But then the real big inflection is the one we're pushing into now. And so if we're able to get into there, then the target becomes essentially the other side of this little area here. Hope you guys can see that. And this even goes back to the week before. It'd be an upper edge of that distribution right there, right? So this is an important moment. And that's just a visual of what I was talking with Jim about. I thought it was interesting. And I know a lot of people like to hate on Ray Dalio. I personally do not understand that at all. If for those of you who are Ray Dalio haters, please let me know in the chat, why do you hate on Ray Dalio? The man ran one of the most successful hedge funds in the world, the largest hedge fund in the world, which you could argue is a big deal. I am such a fan of the culture, right? Like I remember reading the Bridgewater kind of manifesto thing when I was in college. And I understand that that's not for everybody. I can tell you it's for me. Know your place, rank and file, a pure, and I mean my name is Merritt, and he runs a meritocracy as he calls it. Um, so it was bound to be. Um, the way that people have believability indexes and the way that you can give feedback to anybody and all this kind of stuff. And now, if you've not read his book Principles, I mean, man, really, really incredible. He's and I believe him when he's in that phase, talking about that phase of life he's in now, where he's thinking more about legacy and giving back what he's known to people through this book and different things like that. Um, so, anyways, um, so someone saying maybe he ripped off some stuff from other people. Um, I do think we all rip off stuff from other people to a degree, right? Like, but as you said, he doesn't give any credit. So, um, I don't know about that. Maybe that's true, but yeah. Yeah, I think you're right, T. Ashley. I do think that nobody wants to hear that, no American wants to hear that maybe America is tapped out a bit and headed lower on the global power stage or something, things like that. But look, it's he's a true academic. He's the best kind, right? He's one that not just talks the talk, but was able to walk the walk for many, many, many years. And so, yeah. Anyways, I forget why I was even talking about Dalio. I literally cannot remember why I even brought him up. Have some more coffee. So anytime delta goes one way and price goes another, that is, by my definition of the word, absorption, right? And what is absorption? That's exactly what we were talking about a little while ago. Held bid, held offer. Um, um, and just it's not as simple as one held bid or held offer. They hold it for a while and then price moves a little. Then they hold it for a while at a level, then price moves. So you don't see it in price oftentimes, but you'll see it in the cumulative delta or on a footprint because bigger numbers were being traded, or like the order flow labs guys will have the profile on the right hand side of delta at price, right? It's like in my mind, it's like a simplified version of a long-term, right? Long-term footprint chart, right? That's showing that. So anytime you have price going one way and delta going another, or delta going strongly and price simply not moving, that is absorption. That is a passive buyer or seller who is sitting on a bid or an offer, and just people are trading into them aggressively, and they're saying, yeah, just keep filling me, or they're refreshing that bid or whatever, holding a bid, iceberg, all those things. It's probably the most common question I get about delta. And I'll tell you even more. Whenever you have what is a passively driven day, price is trading higher all day, of trend up, and delta is flat or negative even. That is a passive buyer that is causing that market to price higher because they're holding. Market tries to go down and they're holding it, right? There is a bid there and they sell into it. There's all kinds of places you can learn about delta. You can learn about it from myself and our NADRO course, or our scalping course. The scalping course in particular is the most order flow centric, order flow heavy version. But obviously, the order flow labs guys are big on delta. They don't do it like I do, but the concepts about order flow and what is potentially meaningful order flow event is there's no way there's no different way to put it. It's no matter how you slice and dice it, we're all looking for a lot of the same things, right? We're all looking for, oh look, there's absorption, or oh look, these sellers are running out of gas here. They're not as aggressive as they have been. Or, oh, look, there was a very capitulatory type move that the other side came in very aggressively afterwards, right? Like those type things. You can use cumulative delta, you can use footprint charts, you can use all kinds of different ways of seeing it, but we're all looking for pretty much a lot of the same things on the tape, or staring at a dome. Dome brings in new information. It's not something that I do, but I know it's I was talking with Stowe last night at dinner, and he was telling me, how a dome is important for him, right? And in his trading, and for me, it's not. It's just another way to maybe click a button or execute. So when you talk about a dome, or as a lot of people like to say, a DOM, that brings in a new piece of information. When I talk about order flow in my world, it's trades that have been done. It's people putting their money where their mouth is. It's actual trades that are done. Here we go. PMI below expectation. But anyways, to sum up that point real quick, when you introduce a dome or a DOM, you're actually looking at advertised orders, not just completed orders. So does a PMI? Oh wait, the ISM services prices paid at 69, highest since October 2022. U.S. service activity nearly stagnates as employment contracts. Could potentially go stop hunting. So I banged into a little short here. Kind of drifting around. Markets, it's kind of wedging right off the spike low after the latest news release. We're right here in the middle of DVA, not my favorite trade location. I'm gonna flip this over to M&Q right quick. It's gonna take a little off into that, and this time frame is obviously not great. So match break. I don't want to see us threaten here. Just gonna throw that stop in there. 0250. I'm gonna try to grab that. This trade, as I said when I put it on, is a stop hunt. I am hunting stops below those lows that I got out of right here that I thought were going to get ran. Um, just got a sense of the vulnerability of them based on just price action pattern, order flow, but order flow was very, very lackluster. Buyers kind of responding here as well. Just going to bail on it. Nut trading, this guy's been doing this for 20 years. And yes, there's been times today where have not had a stop in. But I have the risk desk on speed dial on my phone. I have multiple uh, sources of internet. I have multiple devices. I'm pretty confident in my ability, given worst case scenario, to know exactly what to do to get out of a position. And yeah, I don't recommend everyone at home to not have stops in. Piyush, I don't understand the question. Till when a CVA is valid? I'm guessing you're meaning how long after, right? So one gets formed, then we break away from it. We're no longer actively in that CVA or building new days as a part of that CVA. I keep them until really one of two things happen. Thought about banging back into the short right here. I kind of missed it. I could apply a momentum stop. I'm not going to do it. I've done a little too much of that lately and kind of, taking too many paper cuts. This is a choppy region. It's choppy when we were down. It's a choppy day, first and foremost, where we're ranging within the overnight range. It was choppy down here, and this has been choppy since the news. So a lot of times I'm hunting stops below here now, and I'm hunting stops below here now. But a lot of times the momentum style tactic that I was thinking in my mind to apply just does not work well in this type of condition. So I'm gonna for that reason I'm out. Piyush, I'm literally answering your question. You can stop asking it. It's valid up until there is a new CVA that discredits the old one, right? So what are we trying to do? We're trying to see where there was, yeah, that was the joke, Michael. Yeah, that's what I was doing. Where is balance and where's most recent balance and how large is it and how many days is it and things like that? How good is it? We're always, people think like you can just measure a value area and that works for anything. Value is only a calculation of something, and value calculations are only as good as the thing you're measuring. So we want to look for good balance. So anyways, getting a little too far into the weeds with that there, but once you have a balance, let's say here, and then we break away, we go above, below, whatever, and then you have a balance that's here. Well, guess what? The edges of this balance are now more important, the one further in time, the more and more recently formed, than the edges of the old one. And that is where, when they disagree with each other, we cut off, as we call it in Apteros, cut off the old one and get that drawing up for the new one and lean on it. It's just not a high quality enough of a trade. Um, I liked it post news. We're really wedging. Things are getting tight. We break. I was looking for some stuff to happen there. So now that it broke the pattern, it broke the little wedge, and then the momentum wasn't there. The sellers weren't there. It dried up. It's wiggling around in that same area. It's just not as interesting of an idea for me anymore. It looks like we're going to do it. Here's some sellers piling in as we speak. But look, that's the way it is. It's important for me right now where I am in my trading to make the more, let's call it, harder decision, less fun decision, more mature decision, more process driven decision to say, no, you gave it a shot when it was good. It's too messy now. We're just going to watch. So important. You know, as this market tries to go lower, I would disagree with MW about, I mean, it depends on what time frame we're talking about and whatever, but my expectations for the what is right now, given that this is a push down into yesterday's upper edge of yesterday's fat distribution, I'm not expecting really good momentum. I'm not expecting a real good like downtrend imbalance. I'm expecting more of what I tried to participate in this morning, which is maybe a wick little stop run to then kind of be more bullish from. Now, if we start to accept back underneath into yesterday's value and balance, then by all means, I'll be in kind of a scalp short mode. Um, well, there you go, David. I answered the question with before I even read your question. Opening range play today. So the like the 30-second opening range. We could do a let's see. So do I have this right? Is the opening range, the 30-second opening range here? Looks like tough sledding to me. And I'm not an opening range trader. Um, but it looks to me like, okay, we're breaking out of the downside, getting stopped. If you're re-entering, you're getting stopped. If you're taking this initial break of the upside, you're getting stopped. Um, maybe if you use this flag pattern, then you catch this and you're getting at least scaled. But then coming into news, it looks. Yeah, I'm just genuinely curious. You said you did well with the opening range. I'd be curious to see like what that was and how you did that. It looks like a tough one to trade to me. But what do I know? I wish we could have taken out this kind of 303 level. It would make for a better long play. Still might do it. Most of the volume now post news is below average for this time of day. All right, let's see the stop run. Let's get it. Oh, I was like, why are my charts so different? It's a 30-second chart. Let's get back to volume. There we go. Okay. You see the delta, they're slamming it. So I got long. Out. Can hold the low. Back in. Stopped out. They like this spot here. I'll continue looking and working this. stand aside again. All right, we'll go hands off here, and it seems like the market's got a little more energy, a little more something to take care of here. It's printing bars down here. What would normally be a lower extreme and tough to sustain. So the markets, what's not happening right here is important. So there's some clearing out of longs right there on that little blip. Re-entered the long. Let's check on the chat. Bull market is over. Whoever called the momentum to the downside is correct so far. Nice call. Buyers are responding pretty well here. You see the delta change. We actually saw some buying coming off that low. El Stopperino. Yeah, it is kind of a slow motion meltdown. There's not much speed to it. Pretty nasty looking. Look at how the bars looked through here and how there was nice little ebbs and flows, and then look at how this has looked since then. just very, very erratic. And that's why you see me with the five stop outs, is because it's giving the fake momentum shifts, right? And when the market does that, I lose money. It doesn't matter what time frame you're trading on. I trade momentum shifts that require continuation from that point. And when I don't get that, I don't get the bag. Well, I wouldn't say, I mean, we knew prior value area high was lurking just below there. Um, I was looking for more of a quicker stop run. This is deeper than I was kind of looking for. It's still a good trade location on short term, just from a lower extreme. The lack of any amount of just super aggressive selling. There's obviously some sellers there, but they're not doing much. But the way that these bars keep forming, look at these bars, how it's just a cluster of them rather than being lines of up moves and down moves. It's just these nasty little clusters, which is tough to trade in a momentum place. So what I'm going to do is what I often tell you know, my students and desk traders, which is you can wait for the market to open back up. So I'm going to wait for a nice up rotation, and then I would look for maybe another clean looking down rotation where I identify that maybe the sellers are kind of weak, the buyers are really taking back over the tape, we've rejected prior value, and then I'll look to reinitiate longs. But for now, given how choppy and messy this is, and I spent five bullets there trying to catch it, um, it'll be hands off until the market opens up again. Very powerful concept that can really save you um, from throwing good money after bad at times. This is why I say that um, your directional bias is more important than your execution. I think maybe even Crudele might disagree with me on that. He's kind of in the camp of, execution is everything. You could have a very inferior plan, but as long as you're executing, that's really what matters. And there's a lot of truth to that. Obviously, it's not one of us is right and one of us is wrong. But for me, it's kind of case in point here today, where I was playing what I saw as more of a stop run rather than a trend move, and it was more of a trend move and a really nasty, messy one. Um, so I lost. My execution wasn't bad. I was executing trades just like I always do, but the direction was wrong. when the market's operating more cleanly, like it was back here when I took the stop run trade short, I get scale outs. I can easily scratch when it's not looking good, things like that. But when the market gets kind of messy, it's tough to do well for my style. Now, if I would have thrown in a 100-point stop, we'd only be in one position still, right? I got such a kick out of that whole 100-point stop conversation on X recently. Oh, nice, Cooper. Awesome. Okay. Good clarification there from Crudele. He's with me on this one. Anyone else in the chat that we will see you tonight at the event? Oh man, I might have to cancel on the Ninja event tonight and go fly fishing with friend Tintin. That sounds awesome. Yeah, yeah, it's the same event that the legendary Stowe is going to. Drunk Radish will be there. Jeff Lewandowski will be there. HK. Okay, so we got the up rotation. We got the down rotation. Market trading a little cleaner than it was during this phase here, so that's great. We've reverted back to the most traded price for the week. It's also a reversion back to our weekly VWAP. Recall, it's a rejection from that volume distribution from last week, that critical area we talked about. And at this point, the long is off the table because of how far we've moved into yesterday's distribution. So it's I could potentially look short even below that kind of prior value high 87 area. Right about here. So you see me trying to get long kind of into that area as it was tested. And now we're holding underneath it. Yeah, wonder it's actually the opposite. Um, People will use other funding companies and whatnot as a springboard into Apteros. Apteros is really more of the larger desk. You can get access to kind of, 106J rates and that type thing, live capital, real help, real coaching, all of that. So it's actually opposite. Traders will use other places to springboard and get the seat on Apteros desk. If you want to try to get a quick, make a quick buck or YOLO something and kind of roll the dice or whatever, that there are plenty of places out there to do that. But then you want to come to Apteros and it's a real place to build a career. Um, yeah, super excited about the Apteros Spain launch for sure. The the guy who's heading that up has, as they do in Spain, has been on vacation. So it's not full steam ahead quite yet. We're just kind of announcing. Love it, Wonder. Come on, love it. Yeah, yeah. That's funny. Well, I wish the market would rotate up and down rather than grind. And this is a grind down. It's not supposed to grind down. Forget the exact number right now. I think we have around, it's just under 20. The 15 to 20 range, somewhere in there. Let's get this chart back on NQ. We're now almost down to yesterday's value area low. Nothing significant about that for me. I'm assuming we have now touched weekly VWAP. That is correct. Just tagged it. Weekly VWAP, prior value low. And there's the buyers. All right, hopping in long. We got a really good buyer response. It's from an area where there's some confluence of references, but it's mostly just because of the way the tape shifted after such a prolonged, we're coming off of a lower extreme here intraday. just a chart trader. I just prefer doing it. It's just, to me, it's just I'm such a visual kind of trader as well. The dome with NQ is always tough because it's also skipping around a lot and coming out of view, especially with a laptop like this where the screen is smaller versus a big monitor. You can really stretch it out. All right, the drought continues for me, but that's okay. This is part of trading. Won't be my last drawdown I ever have. Sellers took it right back. That buying that we saw coming in, the sellers took it right back. As you see right here. It's a great question. What's an acceptable drawdown from equity highs? That's kind of like what's acceptable is tough to answer. That it's like, what are we asking here? When do you have to quit? When do you lose your seat? When do you stop trading? Those things are not a one size fits all. We all have different um, risk. We all have risk constraints, right? Doesn't matter who you are. You have risk constraints. I don't use pure drawdown to tell me when to reevaluate or to slow down. It's actually a pretty cool little thing. And it's really almost like an XY plot of performance ratio. So I know that that's not going to mean anything to most of you. So let me explain it. Whoops, I think I just turned off my video. Hopefully I'm back. Let me draw it real quick. So let's see here. An XY plot where you have, the two aspects of what we call performance ratio, right? You have win percent and you have your average winner to average loser ratio, which I'm just going to refer to as actualized risk reward, right? And there is a curve on this plot that is the curve of break even. And that's what it looks like. So if you're breaking even at 1-to-1 risk reward, what's the break even point on this plot in terms of win percent? 50%, right? If you are 50-50, 1-to-1, you are breaking even, right? Before expenses. So what I actually look at is like my cluster of where the data is, right? And I'll like connect them with lines and things like that. And then over hundreds and hundreds and hundreds of thousands of trades, you end up with this cluster. And yes, sometimes you drift over on the negative side, right? Not all, whatever period sample size, 20 trade, 50 trade sample size. And you start to see, okay, my performance kind of I kind of live in this box. This is kind of where my performance lives. And if you start to see it push out of the left side of that box or out of the bottom of that box, it means something about your style or the market's conducivity to that style, if that's a word, has gone awry. Something's actually really wrong, and you need to really reassess and at least just pump the brakes, maybe cut risk, and kind of figure that out. You can have really good process for that, and I certainly recommend that. At certain thresholds of it could just be R-based drawdown, or it could be performance based. Yeah, hopefully that helps. Yeah, I certainly gravitate towards the scalping stuff on these streams, just because it gives us more to talk about. It's a better fit, I think, rather than sitting here all day talking about, um, like I've had conversations with people in the community that, this week about all these different markets that we're setting up for swing potential and things like that. There's just going to be a lot less to engage with. No, I'm not very aware of volatility seasonality. I know that obviously summer vacation times that markets tend to get slower, volatility tends to dry up. Obviously, it tends to pick up around earnings. But yeah, I couldn't tell you more than that. I don't think about the seasonality of volatility itself. I mean, look at this, guys. Remember that little wedge we were talking about here and the short looking for the stop run and things like that? And then we did get the stop run, tried a handful of longs. Um, there's been no rotation on this chart, right? It's literally um, quite the grind. What's crazy though is that this is a move that is like sustaining well beyond the second standard deviation from VWAP. And it feels like it's in slow motion. Yeah, congrats on those of you who've caught the short. Fantastic. Edge alert from Jimmy Cags. I Yeah, I feel like I get this question every week. It's like, hey, if it's selling off, why not just maybe put a small size on short just to see what happens? No, 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 no. That would be outside of process. That would be a big mistake. I'm looking for my trades, and you have to live and die by your process and your trades. You can't just I'm not a fan of putting out a little feeler, like things like that. Yeah, I think your intuition on it that it doesn't feel right to do that is spot on. You really want to be building that muscle, flexing that muscle of executing well for your setups, your trades, and then doing a lot of sitting on your hands when appropriate. So market going back into, just notice the bars here, right? The back and forth, the big overlapping bars versus what we did see was some clean momentum through here, like a choppy pause, little break, and now another choppy kind of pause. So the lower edge of value from yesterday is, call it 15, 215. Somewhere around in here. Yeah, it's close enough. So that's an area we can watch. If we do get a decent retracement, if buyers can finally kind of muster something of a bounce, I could look for me, a potential what we call breakout pullback out of the downside of yesterday's value as just kind of a short-term context, short-term trade.
Merritt, good morning, brother.
Good morning, Stowe.
How you living?
Living well, man. How are you?
Good, good. Yeah, had a pretty good night, I think. How about you?
Pretty good night.
Trying to figure out if I want to buy this down here.
Stowe and I are actually sharing a room. He's actually just if we just move the lap, he's actually right next to me.
Funny enough, I'm in like I don't know, my hotel has like a full kitchen in it. So that's where I'm at right now. But looking at the dishwasher, giant refrigerator.
I'm staring into a bathroom on the other side of the laptop over here.
Okay.
I gave you guys the good view, and I'll take the. It is a really nice bathroom, though. This place is nice.
All right, cool. I got everything pinned. Got everything good. Man, what a weird sell-off.
Just
kinda,
like a slow motion train wreck, right?
Yeah. Yeah, it's definitely retracing almost the whole day, but we're about to get back to where we opened yesterday in that opening range. And that's often a good trade. We talked about this last night, and so I'm trying not to break any rules and buy this right now. But this is kind of a long I'll take outside of my normal process where I don't initiate longs if this has been selling off this hard. I don't know. We'll have to see if it properly does a context shift or not. So that's what I'm trying to watch for right now.
I tried a few early as we were maybe like running some stops below kind of the overnight range and whatnot, and testing yesterday's value area high. I tried 5 times from that area, just taking paper cuts on all of them. And then I took one more. I don't know if you recall, a few minutes ago, there was some substantial buying off of one of the lows, and I joined that.
Yeah.
And again, just another stop on that.
There we go. Okay. So it's maybe thinking about it now.
Yeah.
I don't know if that was. I'm trying to look at yesterday just to get some. Try to get all the way to it, just to get some context. Yeah, I mean, that giant opening drive toast. I would have liked us to come back to at least 110. We didn't quite get there. Didn't get back into the opening range. We did kick off the previous day's 24-hour view up close. I don't know if you look at those, Merritt, or not. The previous day view up closes. I like those a lot post trend day, just to give me some context. Those are often good for spots to initiate a bounce.
I use those on all my longer term VWAPs. So like the yearly, quarterly, monthly, weekly, I look at where the plus and minus one and the actual VWAP closes were for those periods. But when it comes to day, I just prefer the profiles rather than the VWAP. But yeah, I know a lot of people who look at that.
That makes sense. Yeah, this still looks like it's getting stuffed up here. So I don't want to do anything stupid from a hotel room outside of my normal comfort zone.
Yeah, I actually traded micros today.
That's good. That's good. I should do that also. It's moving pretty fast. So I should continue to be sized down. Maybe my mini summer is coming to an end. Cool. I'm glad all my stuff works. I was stressing there for a second. The poor tech folks wanted me to do a check last night, and I chose to go, hang out and party instead. So
they didn't even try with me. They just know it would have been a hard pass from me. They just didn't even ask.
Oh man. Well, I'm excited for this afternoon or this evening or whatever's going on.
I was pleasantly surprised. I was asking the chat about it earlier, and there was, a good handful of kind of the names that, at least on my stream, that I tend to see a good bit. They were saying they were going to come hang out and meet us tonight. So it'd be fun.
That's crazy. Awesome. Cool. It's Twitter in real life has been quite the journey. This has been super fun. Yeah. it was so cool to meet everybody last night. And yeah, I was so like, I was laughing and having such a good time all night last night to myself. When I got back, it was hard to go to sleep. I was like, this is crazy. I can't believe I met all these people I've talked to for, I don't know, years and never met in real life. So yeah, it's been a cool experience so far for me.
I've found the trading world and a lot of like the biggest names in that world and whatnot, just plain and simple, pleasantly approachable. When you're breaking into an industry and trying to get involved with something, and there's a lot of negatives we could sit here and rant about the trading world and you know all
Mhm.
kinds of the scummy kind of stuff in it, and especially trading education and whatnot. But man, I will say a lot of the really great people in the industry are just so approachable, and they are willing to kind of help how they can and do things. It's a pretty cool space. It really is.
Yep. Yep. Totally agree, brother. Hey, good morning, Deli. What is up? Did you type that?
There is no way that voice to text would get what's up Stowe right.
Exclamation point.
Right.
Hey, morning, Tracy. Oh, that's good. That's good stuff.
All right, dude. Well, I'm out of here. Good luck with the trading, and we will see you in a couple hours over at the bar.
All right, brother. That sounds good. I'm stoked.
See you. Take care.
All right, peace. Good morning. Good morning. Good morning, chat. Voice message. Oh. Yeah, we we learned some stuff about how Deli texts into a phone last night. It's pretty. Today might be riddled with a bunch of inside jokes that are only for like 5 of us. Good morning, New Grist. Good morning. Wit, they did let me fly. Yes, they did. Yes, they did. I got that real ID just in time. Yeah, that was quite the journey. No, Larry. I did not. I tried to long a couple times and got smacked. And then now I'm just chilling down here. We're starting to make, I mean, we have one set of confirmed single prints right here at 300. And we have just opened up a second one that could possibly exist. Yeah, this is getting into like, I really don't like this short continuation trade to begin with because it often smacks me in the face, but I specifically don't like it post trend day up. And we've retraced. Yeah, let me try to get back to it so we can kind of see it. If you can see this here, I have this set to be to keep the 5-minute opening range from the previous day. And this is the previous day's open here, right here at 094. And we came almost down and tested it. And I mean, this is where the buyers here, I mean, we'll show it here. This is where the buyers showed up bigly yesterday. You know, gone. Price just vanished out of it and didn't come back. So I was looking for this to get tested. Like 110, 113. I want to see we're going in. Let me zoom in a little bit here so you can see. Yeah, so this is yesterday's open. Pretty clean trend and never came back to touch it. I don't think we even came back to touch VWAP like one time. Yeah, right here. This is when me and Leo were frustratingly long yesterday. So yeah, I'm kind of looking for that. I was looking for that 110, but might have come up just short. Not giving it to me, which is okay. But if this is going to be a context shift and we're going to get out, yeah, see, it's doing it. Okay, cool. So we can maybe start to set this up and take a long trade here. If we can get out of this range. Flight here is long. Okay. Yeah, I don't hate that. They have built a ton of volume down here, though. And that was an extremely aggressive sell. Like Merritt said, I mean, it was chilling outside of the 2-minute or the -2 standard deviation down. Like that's aggressive. The slope of this VWAP is almost almost straight down too. So, hey, good morning, Cooper. Like this though, it's been stepping in. So now we're looking at this. We can look down here too. So one of the ways that, again, I utilize the delta volume profile is, this is maybe some exhaustion down here. Buyers were rewarded here. This is where flat here got in. And then we've come back. We came back to retest it a couple times. Now this passive bid is supporting this area. So like Flat here said, I'm watching this. But I'm also conscious that we are below the overnight low, below the IB low. Yeah. Let's see if we can get out of this fast. Oh, there's a big passive sell there. Don't like that. You didn't need to beat him. I'm going to keep my finger on the close button here just in case. Yeah, looking for this bid to be supportive. But that passive seller coming in, can't quite see it because my position is right here, clogging that view. But more passive sell coming in. Let me get this. I'll fix this for us here. I think if I make this 10, it makes it better. There we go. Cool. So passive seller, supportive bid so far, but bid is crossing and not really getting anywhere right here. 210 is the key flat here. Let's see. What time we got? This is my friends reminded me last night that hey Stowe, you're in a different time zone, by the way. So normally when you move time zones, you just adjust and everything just moves an hour or so, but the market is always open at the exact same time, no matter where you are in the world. So it's a good thing. I set an alarm for myself to be like, hey, you're on at you need to log in at 9:45, not 10:45. So yeah, I'm not a super big fan of what's happening here. That seller appears to be winning. Back down to 200. Yep. Stopped. 210 is key. Yeah, I think one more leg down would make sense. That would get us back into that open as well. Florida man, I'm never going to use a bigger stop. It's just not a thing unless volatility like really picks up. If I can't execute with a 15-point stop, then it's not a trade that I should be taking. Yeah, HK, I don't hate that either. That's a good idea. Yeah, 215, 210. That's certainly been annoying. See, Florida man, not to call it out specifically, but like if I had a bigger stop, I mean, I got stopped at 191. I mean, I would be another 20 points down on 2 lots. So that's why I don't do that, because you can quickly you can quickly lose many more points. Oh yeah, sure. No, so what I mean by where the bid and ask crossed is, so up here, this is what we were watching. We saw, all right, so this is what I'll do. This possibly was going to be a context shift. I mean, it still can be. I just, maybe I was just wrong about the moment, which is totally possible. But so watching for a context shift, which we appeared to get, and then also looking at delta, and the way that I use the delta volume profile. So we were up here, and this negative delta is sellers crossing the spread from the offer to the bid side, and then the bid refreshing enough so that the offer couldn't get through this spot. So that's when you see a bunch of, red teams show up. When this red team shows up and price continues higher, that means that, buyers are continuing to buy this, and then sellers can't push it lower. So price is going to go higher. So when I was long here, I'm initiating off of this bid, hoping for it to hold so that price can continue higher in reverse. Now, also on the other side of that is passive selling. And that's what we saw start to step in here in the 210 area. This seller absorbed the buying that was trying to send price higher. Buyers lost this fight and the sellers won. Price moves lower. I mean, this is actually a good retest right here. And then often what will happen is price will come back, retest this initial area of selling. These sellers are rewarded. So if price can continue lower, that would make for a short continuation trade. But that's not a trade I'm super into taking. So we're not going to take it. I might, though. I don't know. It's not bad. Let's see what. This is a lot. This is a lot of buying, though. I've got my delta flip, everything flipped here. Yeah, no problem. Yeah, so all I'm really watching for is, where that passive selling, where that passive buying is getting rewarded or not rewarded. And that's how I choose to interact with, let's see if we can get through this now. It just helps me with my execution. Obviously, it's not perfect, but that's the edge of order flow. I mean, dude, I can't put a stop down here at 150. That would have been a 50-point stop loss. That's insane for a scalp. Oh, sure. No problem, Claudia. Isaac, I mean, so what do I do when passive buyers and passive sellers are both active in an area like this? So it just becomes an inflection point. I'm sure if we got back, this is a pretty tight open, so we can look at it here. I'm sure it was very similar up here. I'm sure there was passive selling, passive buying. This is also a story I've seen a million times, so I can show this too. I didn't see it today because I was trying to figure out how to make my computer work. But okay, so here's the overnight low around like 310, right? And this was also previous day close at like 295 area. So this was a point that was, bounced off of 1,000 times. Got into like a brief trend that reversed. This was obvious. This must have been news at 10. I don't know what the news was. This is always just what news candles look like. And by 10, I mean 9. I don't know. I think my computer is still on Eastern Standard Time. Anyway, we're just back. It smashed back down. It escaped a little bit and then got back down into this tight consolidation range. And you can kind of draw like a little mental box here. It's also the 5-minute opening range. And it came down here, kept bouncing off of this. So this is a seller that really wants to get through this area. And once they did, that's the waterfall. This thing works in reverse also, but this is the breakout of that tight range. And I'm sure that there was a ton of passive buying here to support, I don't know, 1, 2, 3, 4, 5, 6 bounces. So when you have, to answer your question, when you have passive buying and passive selling like that on either side of each other, you just got to pick a side and wait. So down here, to go back to the example, rats, see? That's wild. So got back up, ran this little nip of a stop, and then this selling is still rewarded. Crazy. So yeah, when you have it like this, you just have to wait for a side to win, and then also realize that like we're playing a micro rotation inside of the day, inside of the week. So that's where having like some stuff in the back of your mind, like locations, previous days, opening range, to give you context of what we're actually doing. So are we looking for a bounce here because of what yesterday did? Are these sellers like retracing through some thin volume? That sort of thing. So you got to pick a side. You can see what both sides are trying to do, but it's up to you and your own thesis to have a side based on your process. And that's how you can use order flow to execute and lean off of those areas. But you still have to have your own bias. You still have to have your own trade that you're trying to make. Oh, it was PMI today? There you go, Curtis. There it is. Yeah, it's kind of built. It's building this. It's building this out, which is interesting. I'm kind of leaving this volume behind. I mean, but the selling is just like crashing back through. Sure, Isaac, no problem, man. Anytime. That's what I'm here to do, baby. I'm here to explain stuff and party in Chicago. Merritt said a bunch of people are coming from the chat. That's cool. It brings me great joy. Oh, 10 a.m. was ISM manufacturing. Okay. Yeah, that thing gets wiggly sometimes too. Sometimes those orange folders, they sneak up on you, man. Oh, I haven't tried the pizza. So my Chicago pizza that I like to get is tavern pizza. So I may try to locate some tavern pizza later. Tavern pizza is like extremely thin crust. I'm not so much a deep dish guy. It's like pizza cake. Not really appealing to me. Luigi's? Okay. I'll write it down. People, give me your Chicago pizza places. Nice, Tracy. There you go. Yeah, I've got some Chicago Alpha. Yesterday was actually the first time I've ever spent like any time downtown. That was cool. Usually when I've come to Chicago, I'm in like Wicker Park or Wrigleyville. Would you like to tell us how you did from your strategy? I don't know what you mean. I've taken one stop here, so I'm kind of wary of trying this again. This just looks like a pullback for more continuation. This 210 seller still up there. There's obviously a bunch of volume getting put in here at 200 as well. You can tell this little guy. That must have been a big order. Lou Malnati's okay. Geno's East, okay. Thank you. Oh, form my strategy. How did I form my strategy? Cool. I don't know. This is just something that makes sense to me. I realized a long time ago that I am not good at high time frame stuff. So I just stopped looking at it. But basically, I've formed my strategy. I've whittled it down. It's the best way. So my strategy started when I first started trading as like a giant block of wood. And slowly I've been trying to cut away things that I suck at. And one of the things I suck at for sure is high time frame stuff, having any sort of read on any time frame longer than like 5 days. So I just stopped looking at it. I found that I'm best in, taking 20 to 30 points in micro rotations that are 60 points long. So for the most part, like aside from having all of the market context in the back of my head, I'm only really paying attention to this. Like this market right here, this volume node, this is my whole world right here. This is all I care about until this moves, and then I'll care about something else. Same thing with like when we were doing this is all I cared about. And now that rotation's over. I still have to reference it if we get back to these spots, but I found that it's best for me just to focus on micro rotations, small little chunks, take what I can, get out, that sort of thing. Now I have tools that order flow trading benefits from that a lot because it's very much in the moment. So that's why I found utilizing Delta, reading it, understanding how it works, understanding what the participants are doing, and then what happens when price moves away from what they were doing. That helps me in those micro rotations because you're able to, get on sides with somebody that is trying to accomplish the same thing that you're trying to accomplish. So these buyers here, so example, when we're up here trying to buy this 200 spot earlier, we got stopped out. And so did these people probably. But I was trying to be on sides with this dude, whoever this person was, all this passive buying here. We both maybe wanted price to go higher. We had a big trend day up yesterday that had almost traversed the whole way back to the open. And this looked like a context shift. So I'm trying to get back into value and revisit some spots higher that we haven't touched yet, like this volume up here, back to 305, that sort of thing. Yeah, rogue shots, I think. Yeah, that's the same. That's the same vernacular, same terminology. Rotation, 60-point rotation, 60-point leg. Yeah. Leg to leg is another way to say rotation to rotation, probably. Yeah. Yeah. I try to make it as simple as possible. I try to make everything that I do as simple as possible because I'm not, I don't know how like market plumbing works. There's a lot of complicated things that exist in the market. I don't know or understand any of those things, so I don't participate in that. I don't trade options. That is extremely complicated and weird to me. Yeah, that's why I like futures is all of the order flow is centrally located. You get to see every order that comes across the book if you want to. And, it's kind of like, this is the truth, and you can read it and interpret it and try to solve the puzzle best you can. Hey, what's up, Throne Shop? Yeah, the other thing about that too, though, bro, I just tried to read your username and I realized that I can't. But to the person that's asking me these questions, who has an inappropriate username, yes, I do read the DOM order flow and try to ride the wave, but you also have to pick your own inflection points to look at, because if you just look at random order flow and try to click the button when you see something happening, that's number one, it's a very slippery slope. And number two, you'll always see something happening. And so not all order flow is useful unless you have an area to execute off of. Undercover scammers, I can at least read yours. So and you guys are asking a bunch of questions today. This is great. Yeah, I'm writing a book. All right, Leo, that's for sure. MW asks, how do you limit yourself from over trading? I have tons of rules. Like every time I make a mistake, like every time I lose money, every time I, make a bad trade, that's where reviewing comes into play for me. Also going back over my stats, seeing if my stats are slipping outside of their optimal places, that sort of thing. Then I go back and try to create a rule and then stick to it. And that's how I prevent myself from, not just over trading, but like also, initiating in spots that I shouldn't be initiating in, that sort of thing. One rule that I found after I did this like 3 weeks ago, I went back, all my short continuation trades were blowing up in my face for months. And it was very frustrating because, I'm trying to get good at all aspects of trading, including trying to catch short continuations in the same way that I catch long continuations, which I'm good at. That's my home run. Like, so yesterday was great. Yesterday's easy day, piece of cake, click the button, see this stuff. Today is kind of doing the same thing in the opposite direction. However, I perform worse in these days than other days. So one rule I made for myself after looking at a bunch of charts is I don't initiate short continuation trades until we're on the other side of value, which is, the VWAP standard deviation +1 or some spot up here, right? So I'm not going to try to keep shorting this for lower to catch a continuation trade, because these often squeeze back at my face, which may or may not be clipped. Yeah. So this is a rule I made to not overtrade. Otherwise, I probably would have taken a bunch of trades to try to get this to push lower, and it would have stopped me out as we got back above this +1 standard deviation band. That's a stop out I take. That's a stop out I take for sure. Maybe even here also. So yeah, you just have to make rules for yourself and then stick to them. And I don't know, it's pretty simple, but that's just what you have to do. The important thing is, like, because trading is so much, you're your own boss, you have all this freedom, you have all this stuff. It's nice, but with that comes an insane level of accountability. So you have to be able to follow your own rules when you make them. That's really important. And if you can't, then you're doomed. You can't be a successful trader. I don't think so. If you can't follow your own rules that you create for yourself. Accountability is almost the whole game to yourself. Yeah, Norseman, less trades is better for you. That's cool. Yeah, MW, it's some days have a billion setups in them for me. Some days have 2. I don't know. you know? So it's just all about like knowing what day type you're in, knowing how you trade that specific day type. Yeah. I mean, trading is an opportunity to really get to know yourself in general. So as long as you're honest with yourself and how you perform in those specific conditions, you can make these rules for yourself. And then you just that's part of building your process and building your strategies, is you just come to know what works for you and what doesn't work. And as long as you listen to it, then you can be successful. But like today, if, like a year ago, if I'm trying to force my idea of the market onto what the market's actually doing, that's where you get beat up. That's where you get wiped out. Like if I'm trying to buy every dip down here, even though this doesn't look like it looks like they're trying to buy it. This could be a good long, but it's outside of my process. And I know that. So that's why I can't initiate this. Because over time, that beats me up, because I would be forcing my own opinion on to what the market should be doing, as opposed to what it's actually doing, which is grinding lower. Nice. A patent quote. Sick. No plan survives first contact with the enemy. I love it. That's cool. Yeah. Don't diddle in the middle. That's a good example sometimes. If that works for you, sure. I have like, I don't know. I have some qualms with that saying, but whatever works for you is fine. Personally, I think whatever works for anybody is fine. I don't care how anybody makes money, and I'm happy to see it when they do. So, Joan, you can learn my strategy just by hanging out and watching. I mean, there are like hundreds of hours of me talking into the internet by now, probably on this channel. Oh yeah, I just stream here. I don't really have anything else at the moment. Maybe eventually. Yeah, no problem. I found the best way. So also, let me say this. I don't know if you can learn someone else's strategy. What I would suggest, what worked for me, is being able to watch my peers trade, learn how they trade and why they're trading like that. And then you can use that as context to build your own strategy for yourself, if that makes any sense. Because you'll never be able to see the market the exact way that I see it. I'll never be able to see it the same way Merritt sees it. I'll never be able to see it the same way Pax sees it. It's just not possible. But there are like extremely inspiring and cool elements to their trading that, inspire my own trading. So watching them is beneficial to me. And then same with Leo, Nick, XY, all my dudes. We all trade differently, but I don't know if I inspire them, but they certainly have inspired me for years. So it's just all about finding that thing that clicks for you and that you can turn into a good process for yourself. XY strategy can be purchased for a one-time fee of $100,000, by the way. Yeah, I mean, look at this thing. Yuck. Grind. Seeing lows like this, this is also not a good spot to initiate without it getting run. I mean, this could be fine if it gets run and then reclaims, but all this selling, all getting rewarded. And so this is also a good example too. I don't often have a down day like this to explain stuff with. Nice, new low. Woo, nasty work. But yeah, you just see these lows, aggressive selling at the low. Now, this is how we use red team, blue team in the opposite direction, right? So 120. Do we finally get to the OR? Yes, we did. Okay, 1 second. That's exhaustive. I did say I want to buy this here. What time is it? 10:30. So that was the London close. Kind of a bad fill. It's a decent low. Let's see what we get. Okay. And we got back inside of this low too, which is good. Very quickly. Okay. We'll put this up here. And we'll just watch. All right. Previous side, so IB lows right there at 140. Now we need to get back above these. This rewarded selling, which it did go up and immediately reject. So I don't know. Price is wiggling around. We'll see what it wants to do. Oh, we got half off, so that's good. Tiger line. Yeah, I can see another spot like push 110, 100, somewhere down there. But I like this low. Exhaustive bubble. I don't have a dom up at the moment. I was going to I tried to use it and it was blowing my computer's mind. So I wasn't able to use that today. Joan, I stream Monday, Tuesday, and Thursday. Typically, yes. Yep, Monday, Tuesday, Thursday from 11 to noon Eastern time. And then Tuesday and Thursday, I'm also on in the afternoons from 2:30 to 4 Eastern time. And then occasionally they let me party at other times too. So, okay. So let's watch the delta. Let's see what we can get here. What's up Wednesday? No, just other people stream on Wednesday. I can't stream every day. That would be insane. But yes, typically, actually, I do just chill on Wednesdays. You know, it's nice. It's nice to trade by yourself, which I enjoy that. So. Joan, I use a 750 volume base candles. So it's not quite a time frame. Yeah. So I hate this. This sucks. So seller has come down here to 150, still being extremely rude. That's right. I gotta unlock that third day within a day. I can do the full thing. Yeah, this isn't looking great. Here we got, okay, 130 is the top of it. Selling is quite aggressive. Yeah. there's really nobody coming in. Really no bid stepping in here. So that's also what I'm missing out of this long context. Okay, stop me. Yeah, lower low. Yeah, Foreman, I'm waiting for this spot down here because this is where we opened yesterday and had a trend day, and it was not retested at all yesterday. So there was a buyer that has been unchallenged, for lack of a better way to put it. So this retest is, what I'm looking for. And then I also had some good context clues on it. This is an exhausted bubble. This wick was very nice, quickly bought. And then my delta map flipped to bright blue. All right, so there's a big buyer at 120. Somebody came in pretty hard. Maybe that's what we're gonna get. World's worst fill again. Okay. Delta map flipped again. Retest this 130 spot. Try to get back to this seller here. Oh, whoops. Sorry, my position tracker is squished. There you go. So yeah, this is my reason for buying this down here is this is where we opened yesterday. Unchallenged buyer. We've retraced the whole thing. And yesterday it makes sense when we moved quickly back through it because we left it very quickly yesterday. So, oh my, hello. That was a cool buyer. Tiger line. All right, cool. So yeah, we're back here 150. And this is like, okay, so here's another example. I'm trading this micro rotation based on, or micro leg. It's just a tiny leg. So I'm trading this here. While in the context of the day, we have a lot to do if we're going to get any higher. So at the moment, I'm playing for, what ideally is low of the day. I want this buyer to win from down here. So above 130, I'm confident that we can get back into the buying business that we were up to yesterday. That being said, on the day that we're inside of now, it's not looking good. It looks like garbage. Sell down, retrace, sell down, retrace. So I need this context shift to actually exist in reality if we're going to get any moves higher. But that's why, trade 2 lots. I got 12 points on the first one. We'll get stopped out for here, tuck it there. Yeah. Oh, yeah, still getting towards his previous day low. Fair. Oh, nice. Oh, there you go. Okay, so XY is on Wednesday morning at 11 a.m. So now I know what I'm doing. While I trade by myself, I'll put XY on. and relax. Lito, I got these glasses a couple weeks ago. So they're kind of new. They're newish. My wife's in charge of my my glasses. She tells me when they get old and weird. It's strange. I have to have a running pair and then a normal pair because I have to run in my glasses. I can't never got the hang of contacts. I just can't do contacts. Is my hair different today? I don't know. I don't think so. I'm in a different room, Lito. Is that what's different? I mean, with there's a giant light here. That's not normally there. I'm in Central Standard Time. Maybe I changed into a different person when I time traveled from Eastern to Central Time. Could be. All right, coming back. This is our retest spot, our retest spot right here, 61. So, again, narrating the delta, coming back to test these lows, test this seller that was rewarded, and see if we can get through him. Doesn't appear that we can. Almost perfect to the tick test there. It's annoying. That is annoying. Thanks. Thanks, undercover scammers. I think that's a compliment. Two sets of confirmed single prints. This is, yeah. This is maybe the only time I have a long setup like this. Is in this moment where, okay, so here's the setup. Here's how you make one if you want. You can do this, this is what you should do with your own setups, just to have an idea of what the hell you're actually up to. You should make something like what I'm about to say out loud. Previous day was a trend day up. That opening range, and you can use whatever you want. Use 30 seconds, use 5 minutes. I like 30 seconds. I like 5 minutes for the mid. Also, I just use the RTH opening print a lot too. Just give yourself a zone. It's NQ. NQ needs a zone, so whatever. So previous day, trend day up, opening range, not retested during that trend day up. So that's two qualifiers that happened yesterday. The following day, consolidation at the high that loses. So we are falling back through the trend day that we created yesterday. Longs in that opening range that haven't been retested, that is a good setup for me. It has been for years. So, and that's one of the times when I can take a setup that I have in my mind that I know is good and apply it to a day type that is not necessarily cooperating with that and still, make money, possibly. I say possibly. Oh, nice. Aiden says first week using Chris's reversal strat. Very good so far. Yeah, Chris is a great trader. That makes sense. Oh, we finally got some Delta party in now. Let's see. This is good. This pullback is nice. This gives me confidence that if this is going to be a context shift, we can catch it. Or it's just going to stop me out. Either one is possible. There's our 3:30 guy partying again. Yep, stopped. Let's see. Okay, watch this. Watch this stuff right here. That's a buyer and a seller talking to each other. Let's see. Get back out of this 330 again. It looks like a bid. Pretty aggressive one. 1051. Just watching this this delta accumulate here. Let's see.
Stowe.
Jim, hey buddy, how's it going?
Pretty good. Everybody behaved themselves last night?
No, certainly not. Would you expect any less though?
Yeah. Well, you look like you survived. You look fresh and energetic.
I don't know about that. I don't know about fresh and energetic. It was a long walk to the coffee place today. I'll tell you that.
Look at that though. You're about to get that first target.
We'll see. Nice. Yeah, I don't know. I'm probably on my last bid down here, which is usually the one that works. I try to push myself past where my own pain threshold is, because I've realized that the market is well aware of what that number is. So I'm like, I'll take one more stab when I saw that delta pop in. So I don't know. We'll see. It feels a little knife catchy down here, but then in the context of what happened yesterday, we're not any lower than we started yesterday. So that's it. I feel like the emotional sell-off is a little less impactful. When we just came back to yesterday's opening range.
I got it.
I bet Pax is buying the hell out of this right now. I'm gonna have to talk to him about it later.
Yeah.
Yeah, Jim, it's so funny. I've never hung out with that many actual traders in one room in person, and just like the insanity of saying, the bid, the offer, the crazy words that we say all the time and take for granted in front of like normal humans that are having dinner. I was like, what do these people think that we do? This must be the weirdest conversation to listen to ever. But
oh my God.
It was awesome. I had the best time.
I'm jealous.
We talked about you a lot. All good things. We're all big Cags fans.
Oh man.
And we can't wait to hang in full force in October. That's going to be the best.
I want a transcript.
Well, they don't know this, but I did record the whole thing on my glasses, so I'm going to put it on YouTube later.
Oh man. I wish I was there. It sounds like you guys had fun.
Yeah. Yep. We sure did, man. It was awesome.
Man, oh man. That is super cool. So trade strategy here. Are you going to let it ride, or are you going to start moving stops? What are you doing?
Yeah, I'm good. I'm going to, either this stops me out and I'm done. I'm just going to go for a walk to the market, or this is going to finally get back above all this selling and be an actual context shift. Anything below this, I'm just done dealing with it. We'll see where it's at in the afternoon, but I'm playing this setup also is a like low of the day setup. So I'm playing for low of the day. If this gets out of here, then I'll throw an anchored VWAP on this leg, and I'll start to see if we can get pullbacks to VWAP, or like back here to VWAP itself, back here to the OR mid, all this stuff we haven't retraced to at all. So these will be targets for longs, OR mid, overnight low, all that stuff. If we can get, I don't know, man, this seller is so pissed. I don't know who made him mad today, but he's annoyed. Maybe he's hungover. I don't know.
Now you're back with XYZ this afternoon, correct?
Yep, that's right.
Oh, wow. All right. Can't wait for that. One of the things I was going to ask you too,
Yeah.
we have a few minutes left. I usually do an edge report. I'm going to do one just real quickly. But before that, I had a couple of people inquire about order flow cumulative delta. And I just had Mielo just sent me a message also. And I just wanted to show what's available on the NinjaTrader desktop and how to set it up. And
Oh,
then
sick. Yeah.
we're getting a lot of comparisons with your setup. And so if you, if maybe we could do a little quick compare and contrast.
Sure.
All right. So mission control, if I can grab the screen really quickly here, Stowe's going to stay with me. I threw off the producers are like, wait a second. You just threw off the whole show flow, man.
That's good. Keep them on their toes, baby.
There we go. Thank you. Thank you, guys. Okay, so let me just move this out of the way. All right, so real quickly here. So I'm just going to pull up an intraday chart. This is just a 30-minute E-mini S&P chart. I'm going to right click and I'm going to go to indicators. And then I'm going to look for the order flow suite of tools. And I'm going to scroll all the way down until I see order flow cumulative delta. I'm going to double click on that guy, and it's going to bring it down to the configure section, and it's highlighted already. And on the right-hand side now, I could customize it. The main thing I'm going to customize, I'm going to leave it as candles, but the main thing I'm going to customize, I'm going to look at period. Delta type is one thing, bid ask, and that's what I'm going to show up instead of up and down tick. Bid ask is more appropriate here. And then the period, you could either set it to session, which means it's cumulative all the way from the start of your session, or you could make it unique to each bar or each candle. Either way you want to look at it, you could do it. You could even have two instances up this way. So session is going to be cumulative from when you start your session, and then bar is going to be unique to that bar. So I'm just going to change it to bar for now so we can see it. I'm going to hit apply. And OK, and it's going to add it to the bottom of the chart in its own panel. And it takes a couple minutes to get this thing calculating here. And so now we've added it to the bottom. And this is cumulative per bar, right? I have a 30-minute candle here. This isn't cumulative to the session. So this is just one way to look at it. You could toggle back and change it the other way. And so you can see, the candles make sense. Green is positive and red is negative, and you could kind of use that as part of your analysis. So it's simple, the delta, right? It's the difference between, the trades on the offer and the bid, and that's what you're seeing right here.
No, that's cool. That's nice that you can do it per bar, because then you can take kind of like what I was talking about. We do that with the delta volume profile. We have that reset every 60-point rotation. So you can see the cumulative delta of whatever period size bars you want based on the rotation sizes that you're trading. That's cool. That's interesting.
Okay, so you're setting it on rotation. You could set it on rotation sizes, so that's unique, right? Because you could literally kind of say, all right, this is going to be my range, and when this happens, then I want to see it.
Yeah. So I've found 60 points to be a good spot. And I will adjust it up and down slightly just based on, I don't know, like in March and April, we ran that thing up to like 120-point rotations. It's just depending on what the ADR is looking like. We're getting 1,000-point days back then. So yeah. What I like to try to do normally is live in a 60-point rotation and then capture 20 to 30 points of that rotation. And so in my mind, that gives me, I don't know, I should be able to grab half of what's happening if I'm correct in that rotation.
Okay.
Yeah.
So,
but
all right,
that's
so,
cool. You can do that with those candles too.
Yeah. So we get a lot of questions like, what's unique about Stowe's charts? And well, you've got, some super high power math going on your charts where
Yes. No, this math exists so that I don't have to do it in my own brain. And that's why these tools are awesome for me. It cuts all of the heavy lifting out. But no, you can see, I was actually talking to Merritt quite a bit about cumulative delta last night. And I'm going to talk to him more about it tonight too, but I don't utilize it currently. And we were kind of sharing delta setups, which is another extremely nerdy thing to be doing in a nice bar, but that's what we were up to. But yeah, that's cool. Maybe I'll take a look at that, Jim.
Anyway, I just wanted to kind of, because someone asked, and a couple of people have asked, so I just wanted to spend this last minute or so showing that. So thanks for that. And then really quickly, let's just look at the E-mini S&P again.
Yeah.
I've been kind of looking at this, and I'm going to go back to a daily chart. We had that big green equal and opposite candle, everybody. And we have a piercing line here. This is a technical analysis, kind of nerdy idea. The piercing line is the halfway point between the open and the close of that candle. And that's
Mhm.
at 6306 half,
Okay.
right? And so once we get a candle close, it might not be today, it might be the next day, it might be the day after, it might be never. That's going to be kind of the balance between, are the bears in charge, are the bulls in charge? Right now, it
Mm.
looks like an ugly red candle, but we're not to that piercing line yet. So nothing totally unusual, even, except for the size of the candle. So that's kind
Yeah.
of number one. And then number two, when you drill down into the intraday, you'll see some targets down there. You got that Mentor Q 1-day minute, 63.10, which is 4 ticks above that, 4 handles above the piercing line. And then you got the blind spot 1, which is right there on spot and puts support. So you got a lot of areas of interest down there as well. I'm not saying we're going to end up down there or even test it today. We might not. But it seems like the volume profile on the session is a little bit small case B in shape. So we'll see if this kind of matures and we fill out on the top or not. But those are kind of areas of interest for me right now.
This makes me hate this NQ long a little bit, Jim. ES hasn't gotten quite low enough. I would like to see it. Yeah, there's a lot of stuff that ES has not retested that NQ has. So well, thanks for showing me this chart.
Yeah, well, I'm rooting for you, brother. I
All right,
want
thanks.
everyone on there getting that buy button. Let's get this thing rolling for Stowe for sure. Any event. All right, man. Listen, have fun. Well, I'll see you this afternoon for starters, and secondly, get some rest, man, because you're going to need it for tonight. You're going to be meeting and greeting some fabulous human beings at the Traders meet and greet.
I can't wait, man. It's gonna be awesome.
All right, all right. All right, so we will be back at 2:30. Me and Shai are going to be doing a hot commodities segment as usual. And right after that, Stowe is going to be back with XYZ trading the close. Hopefully, we will see you then.
Thanks,
Peace
Chad.
out.